Are we live? Are we live? This meeting is being live streamed. All right, cool. So we are live. Mic check, mic check. Badadoom. Hope you guys are doing well. Shake my hand. I just need one person to let me know I'm audible and also to let me know that the mic isn't dancing around and the sound is clear. Just one person to do me that big favor. As soon as one person confirms that stuff, then we can start. Hope you guys are doing well, man. So one more person, just one person to help me do a sound check. Can I get a sound check while I get my notes in order? Can I get a sound check? You can see the visual is clear. Is anybody out there with me? Because I can't seem to hear myself. I mean, if there's no one, I can get started, but to me, it looks like sound is audible. I just would prefer I get confirmation that I am loud and clear. Am I loud and clear? In case I need to change something, right? So just hit me up on the chat down below, guys. Hit me up on the YouTube chat there. Am I loud and clear? And then we can start. Sorry for starting a bit late. Fantastic. Shake my hand, Alan. Thank you, thank you, thank you, Alvin. All right, guys. So cool. Let's rock. Pull out my phone because there are a couple of things I want to get the questions out of the way. Only because I already have an agenda for the day. Obviously, I've got specific pairs I want to look into. I've got specific pairs I want to look into. So I'm just going to quickly pull out. I can see there are a couple of questions on USDCAD. So look at that right now from Sia. Sia is a registered student, and Privilege. Hey, long time Privilege. Privilege also wants to look at Euro something, EURJPY. It's got a couple of items. Okay, so let's take out those two signals and then we start. If you're new, by the way, this is our live weekly analysis, right, of the forex market, where I give you guys a bird's overview of price direction, market direction, potential entry points, stop loss, take profits, what trades, good trades would look like, well, what bad trades would look like, etc., etc. And it's all in all just to help you have a far much more better profitable week, all right? So that's kind of like the whole point of war room trades, all right? But specifically, there are several war rooms on our YouTube channel, just the last two. This is war room number 40. So I just want to be very clear. You want to go back to war room, if this is 40, you want to go back to 39 and 38. I carefully labeled them. War room 38, 39, and 38, right? The previous war rooms I did this week alone. Those two war rooms and today's war room are the beginning of what I'm going to call my target trades, all right? So I've already covered a lot of assets in 38 and 39, which I think will be a great idea to go back to as quickly as possible because the signals are already in there. Naturally, if you're a registered student, I saw Sanele asking in the private group chat, I just haven't had a chance to answer. If you are a registered student, I am going to make sure that I upload the full set trading plan inside our remote course. If you're a new student doing the live course, I don't really expect you to be trading because we haven't finished the course yet, but I'll also just email you guys my full trading plan. All right, I'll send you guys an email so that if you want to be sneaky and break the rules, at least you trade accordingly, or even much more better, you actually start to apply what you're learning to the trades I am taking. Very, very important, right? So that's what it is. So far we've got 12 trades. I've got 12 clean trades out of all the assets I looked at in war room 38 and 39, right? So what I'm saying is I'm going to draft up a trading plan tomorrow morning for the first 12 trades. This is what our remote course looks like. Inside here, financial notes, forex stocks, I'm going to literally dump everything in here. So the first financial note will be on war room 38 and 39. And then by Tuesday, if not tomorrow, Monday, what I'll do is I'll then add trades ideas for today's war room. So I'm going to write here October challenge, right? And just so we're clear, my challenge is $16,312 US. This is what I would like to make, right? This is a preset figure, right? It's my goal. It's got nothing to do with you. If you want to take these trades, right, you have to target your own goal based on your capital, right? So that's all very, very important. I'm very like downright direct about that. You will not be using the same lot size I'm using. If you're mirror trading me, at the very least, you'll be copying the trades I'm doing, right? Which we cover in these war rooms, but you're not going to be using the lot size I'm using because you don't know my account size. I just want to be very clear on that. To do risk management properly this week alone, I have also taken the time to help you guys, and I've uploaded 2 of our risk management classes on the YouTube channel. So you just go to our YouTube channel. If you haven't seen them already, one is in part 1 on risk management, and then part 2 is finishing up risk management, but also talking about how to grow a small account. There is fundamental steps. You need these rules before taking part in my challenge. I can be, and I want to be very clear about this, I can be in pound USD tomorrow. And I'll tell you, I'm in pound USD, or if you have access to our remote course, you will have the whole trading plan, right, on how to get access to the remote course. If you want to get access to the remote course, I'll leave a link down below in the description box, right? But I could be in pound USD, and let's say it's a sell. So let's say I sell pound USD at 1,200. It's just an example. And then let's say price drops to 1,5. That's already unrealistic, right? Right. Let's say price drops to 1,190, right? Something like that. So that's already some nice movement in price. And then all of a sudden, so markets have dropped. Right, so then you see that I used a standard lot size, which I don't think I'll use for this challenge. I rarely use a standard lot size unless if I'm doing long-term swings. That's the one thing about me. If for short-term trades, intraday trading, I'm big on risk to reward ratio, which part 1 and part 2 talk about. I mean, in the live classes, we're talking about how I was risking $10 to make 100. And the other trader is $5 to make like 80 or something like that. And then I ended up this was the plan, but the reality was I took profits. So I ended up risking $10 to make 60, and then the $5 went up to 40, something like that. And I took profits. The point is, this is good R&R. I am risking $1 to get $6 from the market, right? 5 divided into 40 is about 8. So I'm risking $1 here to make $8 in the market. This is what keeps you in the game. It is not a trading strategy. A trading strategy helps you understand market direction. Right, that's fantastic. We want good trading strategies. If you're new to this channel, we are supply and demand traders, order flow, order blocks. There's nothing more. We don't debate about retail trading strategies. We don't care for them, or I don't care for them. I'm coming out blunt today because last year when I did a challenge, I did a $12,000 challenge. It went amazing. And then I did a $20,000 challenge to raise PhD scholarships for trading psychology. That also went amazing. But along the way, I'll give signals and people still blow accounts. And I realized because I'm also in the trades. So you can't say to me it didn't work. I'm literally in the trade with you, right? First of all, some trades will most likely go bad. This is why we want to have perfect risk management, right? This is not a magic wand. Like I've been in the game long enough to know what keeps me in the game has a lot to do with my psychology and my risk management. And then finally, at the end, mastering my strategy, ST for strategy, right? And we call this a hit rate. A hit rate is a combination of a lot of things. How many trades you win, your risk to reward ratio, and spreads, right? Or commissions, depending on the broker, right? That's the combination of my high hit rate. It's a combination of understanding these things. So if I'm in a sell, real quick with this example, while we're waiting for others to join us, and price drops, and I make a little bit of money here, prices drop, and I had a standard lot size, and you saw me do this, right? So I don't know whether I'm going to be doing them live, because I could do them live. But the problem is if I do them live, right, or rather, let's start with the recording, like I used to do it. I prefer the recording version because but then when I upload stuff, there's like a 24 to a 48-hour lag in between. So that's why war rooms are important, because today you're going to hear my plan for about 12 other assets. 38 and 39, you're going to hear my plan for those assets. So war rooms are key, because once you start watching the recordings, you're just hearing the logic and the psychology behind why I'm staying in the positions, why I'm moving my stop loss, etc., etc. And the bigger advantages for everyone who's already in the academy, because all these detailed notes will be there before execution in that folder in the remote course. So you want to really pay attention to that folder. Make sure your notifications are on. Every time I update the remote course folder, you get an email, you check it out. But here's the example. I hit a standard lot size here. Now, and then you do the same thing on your account. Right, now I'm going to be doing this challenge. I'm looking for a combined total of about 16,000 US dollars. And if I get to 8, 9, 10 by December, I'm not mad at anyone. I'm happy for that, right? Or, you know, if I blow my accounts, because that's very important to talk about, then there's a whole lot of stuff I need to learn and understand about the markets. But let's say I've got 3 accounts. So my partner, my wife, I'm back testing on Deriv. So I opened a Deriv account for her. I really don't want to own one. I used to have one 2 or 3 years ago. I don't even remember the password. I just moved away from Deriv a long time ago. Didn't care much for it. But I want to back test a couple of things there. So there's $130 there on that account, like proper capital. There's a broker I don't want to announce, because every time I announce a new broker, people run there while I'm still testing the broker, and then the broker manipulates them and scams them and blah, blah, blah. And then people come and say, you know, this broker. So I will announce this. So far, this broker has got a big thumbs up. It's going to be the first local South African broker I use or add, right? There's about 1,500 rands. So it's really the same. It's like about 130 US dollars, give or take, just under 2,000 rands in that account. And then for my FX accounts, right, my 2 FX accounts, and this broker, the broker that I'll be using here, the South African one, I want to do a lot of weird things. I want to do stocks. I want to go indices with a very small account, because I'm back testing my module 3. Then the next one is the broker which I use to trade all my live accounts. How to 5x, 10x your account. We're going to use the account that you watch me live trade up to about $24,000. That's still like that. And then I'm going to also use an account that's currently sitting at about $6,000. I mean, obviously there's like 6,100 and something, like various, right? So I'm going to be trading on these 4 main accounts, right? For different reasons. One, because it's going to force me, the challenge is going to force me to finally fully backtest derivatives and then fully execute live trades, because I do 1 or 2 videos every 2 weeks and I move on, and my little brother keeps harassing me. He's very good at this stuff, so he's waiting for me to kind of like come back and finish the list. This is because I need to finish M3, because I normally leave my back testing for towards when I'm not busy. And then these 2 accounts, obviously I wouldn't mind growing them a bit, right? So this is the capital I'm working on. So obviously I can easily use a standard lot size here. I'm not crazy, right? I can easily use, technically speaking, according to my risk management rules, only here, not really, right? 365, 10,000 US dollar accounts is the only time you can use a 1,00 standard lot size, because for every trade at 1,00, with how we measure our pips and our areas of value, which is why you must watch all risk management videos first, because if you don't know what I'm talking about, don't even take these trades, right? But I've put you up, the game is there. Just watch the videos I talked about, part 1 and part 2. But for a standard lot size on a 10,000 US dollar account, you're risking about $500 US per trade. So that's just kind of like how we run the Senior Traders program. And you actually want to dial this down. So when you start going north of 10,000 US dollars, you want to move away from risking 5%, and you want to get to about a 3%, 2% maximum, right? This is what keeps you in the game, right? So you know, long introductions out of the way. I see you, Lincoln. What's up, man? Zimbasa, right? Good to see you guys. Good to see you. Sheikh Man, right? So with all that being said, we sell in pound USD. I have not forgotten the example I'm making, and I use a standard lot size on my 24,000 US dollar account, which is about almost 300,000 rands, right? And price goes my way. But remember, it's me. It's my target. I'm literally the pilot. If you've ever been in a plane, you never get up and tell the pilot that there's too much turbulence. Please avoid the clouds, right? If you're taking part in this challenge, you're really doing the greatest sin in trading. The greatest sin in trading is taking a trade that you do not have analysis for to back out. These are my trades. That's why I like teaching people how to do this, right? So rule number 1, I'm not going to trade for you. No one's going to trade for you in 365. We don't do that because we don't want to have any scammy stuff. Learn to manage your own money. It's not hard, it takes time, but it's doable. But getting scammed 100 times because you're looking for the greatest shortcut, the best bot, the best signal service, the best account manager is why your trading psychology is completely out of whack, right? So learn this by yourself. But if I'm the pilot and I'm up at midnight and I take profits, right, I would drop it on our public Telegram group and whatever, etc., etc. But you just need to understand, I have a goal. It is my goal This is my goal. You are here to benefit from the education and my opinion on market direction and speculation. But if your risk management is pure, right, you will have no problems. If your risk management is daft, you're going to have big problems. Because if pound USD drops, as we saw in the example, and starts to retrace, this is where you die. Because you're going to get margin called, because the same measure you use to quickly gain some profits as it dropped is the same measure that's going to be used against you as price is retracing. My account can hold a retracement at that lot size, and I can simply wait for the continued drop if my conviction hasn't changed about the direction, right? So just remember that you are not here to make 16,312. You have no idea where I got that number from. And I can tell you now where I got that number from. We got a new home a while back. We're going to move into it in December. And I understand my partner, she's on the other side of the house, so she can't hear me. So I saw the other day she had a journal opened, right? She's got 10, 15 notebooks. And in that journal, she started writing all the things that she wants to buy for the new house and the prices, because she knows I'm going to ask for prices. Like, just because you're a trader doesn't mean you become stupid with finances. I like a budget. I love spreadsheets. And I noticed that this girl has gone wild. And I know her, she's going to play kind and nice. And towards mid-November, she's going to start doing nice things for me, taking me out and all sorts of things and all that crap. And then on the 30th or the 20th of December, she's going to be like, baby, we need a little bit of money. I'm just thinking to buy new stuff. As far as I can tell from her list, every single piece of furniture we own in this house, we are leaving it here. As far as I can tell. Right, and I saw her budget got to about 215K. This is in rands, not in US dollars. Right, so I don't want to swipe for this at the end of November. So that's where the idea of a challenge came from. She doesn't know I'm doing it for this. She just thinks I'm doing a challenge because last year I did a challenge for scholarships. I don't want to swipe this from any of my cards. I want to raise it in the markets. So if you do the math at the rate of 1:15, you're going to get about 203.12. If, of course, this is about 244, because I'm assuming she's not yet done. So around about online shopping, transportation, blah, 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 244K in rands. So I want to raise this by 15 December to offset how much she's going to swipe from the account, right? That's why. Right, so my reasoning is different. You might have a target of $600 because your capital is small. That's fine. Grow the process, do the account, keep the risk low, forget about all of this nonsense and focus on supply and demand, right? I've wasted enough time with this. Let's rock and roll, guys. I see there's a question there. Demand and supply works on materials. It blows my mind every time. Yeah, yes, sir. It's crazy. Look, man, Mr. Kakoma, and I just want to say, remember, supply and demand isn't Leroy's strategy. It's not. It's a when I lecture industrial economics students at Rhodes, second and third years, it is the premises of modern day economics of how we get to the value of a pen, right, of a pencil, right? It's literally price. So even if derivatives as a broker for indices has massive manipulations, which it does, I mean, I counted 64 manipulations on V75 in a period of about 2 weeks. It has a lot of manipulations the lower you go on the time frame. It doesn't change the fact that supply will pull, because then derivatives becomes the liquidity provider. All right, so it changes nothing. What we need to work out, and what I need to make time to work out this coming week, is how then do we extrapolate clean transitions, right? Because we would supply and demand, but entering as a beginner, like so not you per se, Mr. Kakoma, but I would be a beginner in derivatives, because it's been 2 years since I went back there, right? It's been 2 years, so I'm technically a beginner. So now how do I, or rather more specifically, forget about the beginner, how do you approach derivatives with a small account? Because some areas of value will work, but then I see myself having to risk $50, right? Or on boom and crash on its mini lot size. For me to make $1,000 US, I must risk $50. But the problem is the account in capital terms has 130. So am I willing to risk half my capital to make to 10x the account, right? Which sounds great, but it's terrible risk management. My areas of value should always equate to 5% of my capital, right? Because none of us here on this channel, we know we're not doing stuff for Instagram, right? There's no one cares about that flashy life or those fake traders or demo account nonsense. We actually want to execute good measure and grow consistency. But yeah, it blows my mind. Right, guys, so this is what I'll start off with, the Bitcoin chart. I did allude that I'll start off with this. I'm hoping you guys know that on Friday, you know, a Bitcoin futures was announced. It's one thing to announce it. It's a whole total thing when the Securities Exchange, the SEC Commission, is the one heading it, because it's the SEC that went against Ripple, right? XRP. It's the SEC that takes any type of securities to court. It's the SEC where there's massive billions of dollars of fraud that handles those cases. It is the SEC's attitude against cryptocurrency that will destroy. You can't destroy crypto. There's a big market crash coming, by the way. I don't want my mind to run crazy. There's a big market crash coming. I suspect it will impact crypto, plus stock market. And when I say impact, I suspect it'll be glorious, it'll be perfect, it'll be like an 80 to a 90% wipeout, all right? And if you're long-term like me, that's dope, because you want to start learning how to trade. I'm in a beautiful place in my life right now to say, and I know one day all of you will get there, just stick to the process. But I now use the market to invest in the market. And it's an amazing feeling, because you don't really, it's not pocket camera, it's just your skill extracting value from the market to put back into the market. Now, if 90% of crypto value is wiped out because of the crash, and I don't know when the crash will be, but I know it's around the corner. I know it's around the corner. We're looking at 3 to 6 months. It's around the corner, right? So just prepare for that. You must have a whole lot of cash to buy the dips, and these dips are going to be wide and long. So you're going to want to use the 365 approach. When we start talking about multiple time frame analysis, you're going to have to have a big picture, because if Bitcoin was to crash right now, I don't think it will right now, because right now we're in a state of euphoria. But if Bitcoin was to crash right now, you know, I would be hoping, first of all, I'd go crazy on the exchange and hold some crazy sales, because I can make money to reinvest that money, right? I could sell my crypto tokens at a high profit and then rebuy, right? I could go to Coinbase, like sell 50%, right, at 65,000 or 60,000 US dollars of Bitcoin. So sell half of my crypto, right, half, and then because I'm selling it at its current highest price, keep that cash. While when the crash happens, right? So watch this. When the crash happens, keep that as cash, and then come back and rebuy, you know, my crypto down here, buy around there, or buy 20,000, right? If the crash was to happen like that, I could do that. I'm not a fan of that, because that requires timing of the markets, and there's nothing wrong with that. But if you're busy, you might miss it, right? If you've got full-time work, you might miss it. If you've got kids and you're studying, you might miss it. So what I like to do is start to trade in cash reserves, right? So after this big challenge, that's what I'm going to be doing. So which means I'll have minute targets. If I double an account, I'll withdraw 50% and keep that in cash, or dump it in one crypto asset that I know is just, it doesn't have massive impulses like, you know, Shiba or Dogecoin, like right now, like with the massive ups and downs, but it's just a standard, easy giving 7% interest yielding asset. So I'll just dump all those things in a nice one coin. For me, it's always XRP. I just dump my stuff there. Why? Because I get to buy a lot of tokens at that particular time, and when I sell it, you know, if prices moved up or down, it's less than 3%, so it doesn't really affect me. But I'm also accumulating a lot of XRP tokens at the time, so that when the crash is done and it's now time to buy low, I quickly go sell my XRP tokens. I've got cash in hand, or you got cash in your bank account. Long story short. But yeah, I want to talk about Bitcoin, because what happened on Friday. I don't want to waste time. It's not part of our war room. Right now, a lot of people. Let's just go to the 1 hour time frame. A lot of people would have been excited about what happened on Friday. Let's start off with the daily, because this is just way too much detail, right? A lot of people will be happy about what happened on Friday, but then people forget simple things. Never forget simple things. We are supply and demand traders. What that means is we know for a fact that even no matter how much good music exists in the world, when price gets to a supply, what will happen? Price will start to fall, right? So that's just something I just literally want to highlight for 2 seconds. Hey, how's it, guys? How's it, guys? I see more people here. More people here. Good to see you guys. Good to see you. Right. So please don't forget that we need this supply removed. That's number one. But when the supply gets removed, when Bitcoin crosses over $65,000, which is a real possibility, right? We're going to have a new problem, a new technical analysis problem called break of structure. Markets would have broken its all-time high. Markets would have broken structure. What normally happens when markets break structure? When markets normally break structure, markets have to come back down. So there we go, break of structure here. You see this? Once upon a time, on the 8th of January 2021, this was the highest point of Bitcoin. You guys understand that? This was the highest point of Bitcoin once upon a time. And then there was a demand there that pushed the rally. Fantastic. If I've taught you before, you can easily identify the demand. Right? And then eventually price broke structure. There, markets have broken structure right now. This is part of my module 3, but I might as well give you in bits and bobs. This is literally important. Price have broken structure. So there's a domination of buyers. Forex market, stock market, all markets, this is it. This literally happens on a daily basis, all right? Price will break structure, and then do not forget that markets must come back. You don't know when, but markets will come back. Pause. If you pay attention carefully, this is it. Or this is the closest, at least, that it came back to. Markets come back to a place where they've broken structure, right? There's normally a significant order block or a demand very close by, right? This candlestick, unfortunately, didn't do a good job of arriving at this area of value, but there it is there, the full frontal, right? Literally in line with this supply, if you can see it for yourselves right there, which was, I'm hoping it's clear on YouTube. Like I'm using a smaller screen to view feedback and charts, but I'm hoping on screen one, you guys can see what I'm doing clearly, right? So just be careful about that we are about to see another structure break. When price breaks structure, it returns. And sometimes if the move to the structure is not satisfactory, so if this move coming back to the structure where price got broken is not satisfactory, then best believe markets will seek out the area of value that created the structure that was broken. The area of value over here that created the structure that was broken. So price will return back to the original demand to ensure they burn out all buyers in that particular area. And this area for us supply and demand traders was an area of serious contention, because I still hold that this weekly sub demand was broken. So, and then if you draw it like this, then it's like a problem, because then it really wasn't broken. But for a long time, I believed it was, because I was focused on this one. And so if I just focus on this one, I am right. It was broken. But in either case, this area is weak. This will not hold price again. I mean, it's a nice market memory place for support and all that kind of stuff. But if something terrible happens, right, and I will be releasing a lot of crypto info this week on the channel about why, and I want to just quickly put all my thoughts out there about the next coming crypto crash, how it's going to happen, and how it's very, very, very similar to the 2017 crash. In fact, it's exactly the same. The same problems in 2017 are about to face Bitcoin, and it involves institutions. You guys want the institutions to enter, because we all want Bitcoin to go to 100,000 US dollars, and we all want Bitcoin to go to 300,000. Well, if we do that, we now need institutional power. I think retail traders have done a very good job here. And there are a lot of institutions, by the way, in the background, you know, dark pools, blah, 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 invested in Bitcoin. But with the new futures, futures that was announced on Friday opens the door to EFTs, a broader EFT. When a broader EFT drops, guys, which is nowhere, not too far into the future, right? It means institutions, every single highly regulated institution that can't enter Bitcoin right now. Because remember, if I, as an institution, I mean, I run my own trading corporation, right? So it's literally me. I make all the decisions, and then I find my clients, and my clients find me. We choose who we want to work with. And so for my clients, they don't mind that. I mean, it's changed now, but at least at the beginning of the year, 60% of our portfolio pool was in cryptocurrency. They didn't care, right? Because pow, impulse. We doubled, tripled, quadrupled. As a bigger institutions, regulated institutions, the Allen Greys in South Africa, whatever big issues across the world, they can't have such exposure to a non-regulated market like crypto. So like a little guy like me, I get to dominate this industry because big institutions are waiting for that big green light, and it's going to come through EFTs. Once you do an EFT or an ETF, sorry, an ETF, I'm thinking about electronic transfer, an ETF fund, institutions can start to come in. I don't think I'll be so shocked. Even if it was announced tomorrow, I don't see institutions wanting to jump into the party so late. Imagine every single financial institution being told the price of one Bitcoin is $65,000. Welcome to the party. And we need you guys to pump us to 300,000. Knowing institutions, this is what needs to happen. This first, you want us to get in, we'll get in, but we're going to have to buy low. But I'm going to walk you through all of that kind of stuff. Right. So anyways, in terms of introductions, that's done. Let's look at the first chart that we have here. Let's look at the first chart that we have here. We have quickly going through. Let's start off with Sia's chart. So Sia wants us to look at USDCAD. He's got an entry. I like that he's just giving me everything. If you guys remember, in the public Telegram group, I told you to sell USDCAD. And it's going to happen the same as well, by the way, where I'll tell you to get in and I'll tell you to get out if you're not sure, if you're not brave, because I'm a swing trader. So I don't know how many retail traders could have managed to hold here, but we sold up there in the group. And then I told people to close when price got somewhere here, because that was a demand and I don't know who was going to panic and not panic. Sorry, someone is stuck trying to enter the Zoom YouTube live. Right. So thank you, Alvin. Thank you. So I'm doing so many things at once. Right. So we've got USDCAD, we've got USDCAD, we've got USDCAD, we've got USDCAD, and he says my entry point is here. Just gonna quickly dial up. So my entry point is 1,23870. Yeah. All right. So he wants to enter somewhere there. Let's put in a stop loss. Gotta see everything. You have to back test and see everything. A stop loss is 1,2740. Yeah, I'm confused. See, are you watching online, buddy? See, are you with us in the YouTube live? There's something wrong with your stop loss. So that's the entry point, stop loss, and then let's just make that a take profit line. So I'll just assess the entry point for now and where you want to get out. But there's something wrong with the stop loss, buddy. Something is wrong with the. Wait a minute. Oh wait, are you trying to buy? Okay, sorry, man. There's nothing wrong because I just think sell. So I'm thinking you're trying to sell, but I'm starting to realize you're trying to buy back up. Right. So let me just read the message. I took a fib retracement buy. The fib retracement was used on the governor on the weekly, and the transcend daily, of which I entered. I would appreciate your views. All right. So Sia is in a buy. So wait, we entered here H4. Yeah, you getting burnt, right? So let me just quickly pull out your stop loss. Now that I know, I thought your stop loss was wrong because you were looking for sales, but I understand now you're looking at a buy setup. Right, so this is your entry up here. This is your stop loss, and you're currently at the end of trading day on Friday, give or take 35 pips, right? And then your stop loss size is about okay, that's quite healthy, but I'm worried, my friend. I'm worried about the direction of price. So let's just break down USDCAD again properly, right? So I'm just gonna, I need to also keep careful note of the trades we talk about in the war room so that when I make chapters for you guys, I'm aware of a couple of things. So these are the top 10 trades that I'm taking. I'll give you guys those plans now. So trade number 1 is USDCAD. Right, so I don't know if it's time to buy it, but then that's because maybe I haven't looked. All right, so I see why. I see why you want to buy. I see why you want to buy, right? So I'm going to do something like this first and draw a big old-fashioned zone there. I'm going to draw a zone inside the zone because, we've got some type of a strong turn there. And then you want to buy the retracement, and you're correct. You said you want to buy the retracement. I'm going to give you some averaging trades here. All right, so we do have complicated 365 candles climbing a bit up. I do see that. I just don't know. Why don't I trust it? Right. So okay. So Sia and everyone else who cares for this trade, let's just break a couple of things down. This is a problem. Class effect, right? Because prices really entered way past half the order flows, right? Then markets come back down here. All right, so we've got 1 or 2, and then look at the third one, right? So markets are, to me, it looks like we're trying to zero out here. We are really trying to zero out. Now, the second thing I want to talk to you guys about is, remember, this is the Trump supply. I read like a crazy article the other day, you know, some economists are worried or predicting the return of Trump. That would be funny, right? So this is what I have, and this is in line with the DXY, right? Remember, USDCAD and DXY, same, right? So maybe we also need to pull out the DXY on the other screen. Why? Because the dollar has been very, very, very. Oh, look, it's the DXY already. But let's find a less marked index. There we go. And then let's match the time frames. There we go. And then let's make it clear as day. There we go. Right. So this is the DXY, this is the dollar index, and this here on the other side is USDCAD. And Mr. Sia is looking for some momentum buying because this is quite a big retracement that he wants to hold, right? So this is the Trump supply we saw with COVID, right? And Trump got taken out literally because of COVID in terms of election anyways. I don't think America got any less racist than it currently is, just needed a different type of devil, right? So this is what we have here, and I mean, I could synthesize this for you, right? So the dollar index is shouting back. So again, I agree, right? There's nothing left now. There's literally nothing to kind of like stop Biden's dollar. I mean, oil is going up, yes sir. It has no choice. We can look at the old charts after this, right? So markets are going up here on the dollar. So one would assume that a reasonable response. So just please don't forget, don't get confused. I'm going to write at the top here. This is USDCAD, right? You just simply always have to check here, USDCAD. And then when I click this at the top, it will change, but this doesn't change. I'm clicking this because this is the DXY chart. So this is DXY on the other screen. I don't know whether to say your right or your left, right? So this is DXY, right? So this is going up, and clearly, you know, nothing can stop it, right? But a strong dollar generally always means bad news for the world. But you know, that could be neither here nor there, or maybe actually a much more modest target for now is somewhere there. And I'm currently not in any long-term DXY buy trades on average trade because I'm still waiting to break. I really want to see a clean break above $95 on the DXY, wait for a retracement, get into a buy and hold it until we get to 98. That would be like some spectacular movement, right? So if this continues up there, then we expect this to continue up there, but this has serious exceptions because of how weak this area of value is, right, on the DXY. Please note that, right? Number two, DXY on the weekly time frame, non-stop climbing. Right, non-stop climbing. Still in a weekly supply, more, at least on the momentum side of things, right? So anything can happen, right? So remember, you've got FOMC, you've got temporary, you've got fundamentals. They would want to get one more last push here. I would not be surprised at that before that happens, all right? Or price could just break up to the upside there. What is interesting about the charts now, when you put them side to side, is you start to notice that USDCAD is sitting literally in the middle of dropping into a demand, right? And there's a break of structure here. You guys see that? Let me just use a different color. If I lose you, just talk to me on the chat there so I'm clear. Right, so I'm talking about this white line there that I've made extra thick. right? So now a break of structure is going to require a couple of things. I'm going to need price to close on the other side of the white line. And preferably, since the weekly time frame and we'll have to wait a whole other week, I'll need the next candlestick to form this side. So I'd need another candlestick, another red candlestick to take place this week, right, on USDCAD. I would need, for me to say, yes, indeed, there is a break of structure, I would need something like this, right? So I'd need this, which already Friday closed on the other side of my white line. And now this week, we need to see something change here. If that doesn't happen, and maybe markets open on Monday and Tuesday, Wednesday, Thursday, blah, 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 and price close on the other side, then this is not a break of structure. But if this is a break of structure and markets break to the downside, right? It means USDCAD is going to continue on its trend to the downside, and the next available demand is somewhere down there. All right, so that's where we are right now. Interesting enough, this is obviously USDCAD. Remember, this is USDCAD. Where's that thing that I did for you guys? It's gone. It's too far. Oh, there it is. Right. So this is USDCAD. Please don't get confused. I used to split my screens a lot, and people would be so confused at what it is I'm talking about or looking at. USDCAD. Right, so this is USDCAD. Now, what's interesting about this is the fact that everything is reliant on the dollar. Everything's reliant on the dollar, number one. Number two, I don't think it was random that Alex brought up oil. No, not Alex, sorry, Alvin, right? Because CAD is going to be very strong as long as oil keeps climbing. Be very careful of that, right? CAD is going to be very strong as long as oil is climbing. And I've tried to catch those longs twice. First time I stopped out at break even. The very first time price didn't come exactly where I was waiting for. So I'm still looking for a clean entry on oil, right? Up until we get to 87 and then to $100. But as long as oil goes up, CAD is strong. If CAD is strong because oil is going up, we should experience a little bit of a downside to the dollar. And we don't know if this is going to be the supply to provide that, right? The last time price arrived at this supply, it left immediately, fresh touch. When the markets came back, it gave like a very weak reaction to it. So we don't know if this will be the perfect down or if it's done, if the sellers are exhausted in this level, right? So if markets push up, then yes, that'll work. But now just to come back to USDCAD and put this to bed, you spoke about retracement. So that means you're using the fib. Let's plot a Fibonacci now and see. So you want to buy based on a couple of biases, right? Number one, price is leaning towards a retracement. Let's pull it up. There we go. That's the golden ratio there. That's why markets bounce. So you can see on the weekly time frame, markets are behaving. It's literally reacting to a golden ratio. And if we do something like this, we can find our order block, right? We plot proper candles, which is really a good place to start. Your order blocks are right there sitting. So markets are now reacting to this on the volume based, candlestick. You can see there's massive rejection in this area, but I don't think it's going to sustain because I would love to see an order block here as well. I would love, I keep looking at the chart there because that's where the words are, but I should be looking at the camera. I would love to see an order block here for me to kind of like get that sustained relief on both pictures, but this is enough. Markets could go up, I agree. But if they don't, we have problems. So we need more confluence. We need more confluence for a buy. It's just that it's so difficult for me to change my mind right now. I was so resolute on a sell for a very long time. I was so resolute on a sell for a very long time. That's problem number two. But it's not it's not a supply and demand trend line. This is basically a retail trader's trend line, right? Remember, we have to draw trend lines correctly using structure. So this is not clean. It's not the best trend line ever. Let's pull in a line graph. So if I pull in a line graph, this just doesn't mark the wicks. It marks where markets open and close. You can see, at least from a retail trader's perspective, price is on the other side of the trend, all right? Number one. Number two, from this perspective, I don't see price, coming back to do a retest because of just how far down it's gone, right? But what I do see, and I don't want to confuse you guys with all these tools I'm using, is the fact that markets have been breaking structure. So you see there? Market structure broken. Do you guys see that? Price was coming down turn, supply and demand number 5, don't get up on my turns, right? Then markets went up, right? So there was a structure here, literally bouncing off a trend line. When markets came back, markets fell. So somewhere here is a supply. And so if Sia, I haven't checked it, but if I'm sure if Sia is trying to buy, and his take profit is at one of these supplies, which would allow for price to then come back and retest the trend line if it wants, or at least retest the supply that sent price down, right? Which is really the type of scenario that I want. Well, I want to be in a sell. This looks like the perfect ultimate highest place to sell. Let's double check that, right? So when we use our average base candlesticks, we get, some type of confirmation. That's what we're looking at, like that. If we use candlesticks, there we go. You see, perfect, right? You see, I've got I'm trying to work myself into an idea of why I should sell here, and this so much makes sense on the daily time frame. Barely enough time to retest the trend line, and so markets could. So I would assume, because I want to see a better imbalance, this is possible right now, and then that continues. But I would assume that this would be better for price. Right, in the long run. That's just an assumption right now, right? That's literally what I'm seeing right now. But again, markets are inside a valid or sort of valid weekly demand. So, the buy orders inside this weekly demand that I've just drawn right now could be strong enough to propel price back up there. All right, and if that's the case, then we trade what we see. And then finally, on the daily time frame, this is the situation we have here. Right, let's adjust our break of market structure now. You see that there? That's more, because remember earlier on we're using line graphs, and line graphs don't really give us the wicks. They just show us the body of candles where price closed. But that's a significant area where markets came up, came down, bounced, and kept going up, right? And the reason why one would argue is the fact that banks knew this, and you can see there's an order block there, supply, markets there to put a lot of money to push price down. So now on the daily time frame, right, if you're looking clearly, it might suggest that there was this complicated 365, markets rallied out, markets came back in, markets gave you that big imbalance, right? Number one. But now prices arrived, and the question is this good enough? This won't work because of this now. And that's a case of, is that good risk reward ratio? Because if I can make it clear for you, I'll do something like that. Right? This is a trade. Let's say you're right. First of all, right? Being right is always nice. So let's say you're right. This would put you at a long position somewhere here. And you'd naturally have to get out somewhere there, right? So this is a very, very small risk to reward ratio. And that's only because I don't want to ignore the supply here. The supply could be broken, that's fine, but I don't want to ignore it because I want to take that risk of ignoring. But you can see that our imbalance matches our rules there as an interesting place to sell. So this week, if the dollar decides to go up, right, it'll pull USDCAD to here. And then I expect price to go down just to respect the fact that they broke structure coming down, created an order block, which means they put in money to continue that particular down activity. So this might be actually a good place to sell. So I'm actually, as a signal to myself, I'm going to write USDCAD sell again. I'm going to try and re-enter the markets there. And fundamentally, I'm going to wait for a couple of things, Monday, Tuesday. As soon as I get like some type of turn here, you see that? I'll finally have a swing low on USDCAD. If I can get a turn like that, let's draw it from the right at the top to here, I'll have a swing low. So my golden ratio is somewhere up here, which is that area of value we spoke about earlier on. But this place here, break of market structure, is equally, a PCP, right, where markets generally like to come back to continue the potential pattern. What's the pattern? The pattern is the downtrend. And then I've got another order block there at 50%. And then finally, complicated 365 candles at 0.618. To me, because of R&R, and you can't say, but the risk reward ratio is far much more better from there to there, because then my question would be, what will happen if price turns here, right? So that's my question. So I'm still on, I'm more bearish on USD CAD as I closely watch the dollar. I hope that helped. I am more bearish on USD CAD as I closely watch the dollar. If the dollar gives me excessively bullish signs, then absolutely, absolutely some type of good buy here with good risk to reward management would work all the way there. But if the buy doesn't come clean and is not strong enough to break the current weekly supply, then you're going to have a problem with price in the next week or two. All right, so I hope that helps. Sia, I don't know if you're watching this live or you're going to come back to it. Just let me know in the comments there. Right, and then Mr. Privilege said, I made this a while and left it saying euro is on the downtrend, thinking of doing a sell stop. Right, sell stop. When was the last time I did a sell stop? And this was for, I also have a buy limit in the same chart. Right, so this is for EURJPY. Geez, time is moving, man. Time is moving already. Come on, come on, come on, come on, come on. Oh, wrong thing. EURJPY, right. I'm actually in a that small account that I told you guys about, where I'm kind of like testing a local broker who currently charges a whole lot of commissions. I think I'm in an activated sell right now on this. And when I looked at it on Friday, because when you back test an asset, you don't want to be involved. You don't want to like take a trade and close and take a trade and close. You actually want to see the plan play out or the stop losses get taken out so that you actually have reliable statistics, right? If you keep interfering with your account and coming to save your account every time your fee kicks in, you don't have real data, right? You just have the statistical measure of how long it takes to be scared in the market before you go intervene. So I took that sell there, but I do know on Friday when I went to sleep, I was not happy. I just didn't feel convinced it was going to go my way. And I was actually quite annoyed for taking it because I took it while recording stuff. One of the videos this past week that I just did, I literally took that trade there, and it was probably like one of the most rushed trades I've taken in 2021. But let's see what Privilege says. So I don't know if Privilege is selling there or wants to sell there. So he's asking, euro is on a downtrend, right? So let's break that down. So we're gonna break this whole thing down. Right. So this is the other thing I don't like about euro when I went to sleep. It's very strong. For this to happen in 17 days. Today is the 17th of October. In the 17th of October, there have been about 2 or 3 weekends. If you think about it, if you remove the weekend, so that's Saturday and Sunday, right? So 1, 2, 3, 4, 5, right? 5 days. 5 trading days are weekends. So for us as retail traders, we really didn't have a hand in this for 5 days. There's a 17 minus. There's been 12 days, and this market has literally doubled the size of its average candlestick. Look at this candlestick. This is about 104 pips in 1 month. This is about 167 pips in 1 month, and the last one is about 136 pips in 1 month, right? But look at this one, right? 377 pips in 1 month, and not even 1 month, in 15 days, right? So there's a lot of there was a rush here from buyers, and I know I've really messed up my area of value for where I'm selling, but it's fine, right? A very strong, powerful rush here, number one. Number two, I hate being confronted with price like this. Please learn this today. When price comes at you aggressively, so strong, it's one thing to say we want to do the opposite. So one of our trading edges, right, in module 2 is we talk about how we always want to do what the dumb traders are not doing. So we literally have to identify a dumb trader before you take a trade. And I can't help but realize that no matter who I say is trading here, dumb trader or smart money, this is a very strong move to the upside to confront a supply. It's almost literally designed that way, number one. Number two, if you look at it, markets didn't do a complete retracement. Right, market stopped at 50% and turned, and 50% is actually quite significant. It's a good area where a lot of retail traders would find support and resistance, but also where institutions would like to move on. So this is not too surprising, right? That markets could be done with retracing. Markets could, if markets have gotten a 50% discount, they might not be looking for a 61.8% discount. So now this might happen where price bounces back to retest and then to go. All right, so for now, that's my mindset. But again, we've got a valid supply, and this is a fresh touch. But if it is a fresh touch, yes, then markets will come down like that right now. Literally, markets will come down if it is a retest for moving forward. But how low down will it go? They've created a demand just outside the supply zone, right? So there's not really much that could happen here on the monthly time frame, which is important to understand. On the weekly time frame, markets are like really, bruting through just pure violence on the chart. And if I narrow this down, in the 8 to do a multiple time frame analysis, this is what it looks like, right? And this would be a retail trader, trend line, not necessarily smart money, right? This would be like, couple of touches, neither here nor there, and then markets broke to the other side. Okay, so I'm not, I do see a sell privilege, I do, but I'm not so convinced it's the money maker sell. So I won't really kind of like engage this particular sell position, in my trading plan for the week. But you want to know for a sell stop. I think for a sell stop is actually smart because I'm already in this trade. I was triggered on Friday. I'm already in this trade, and I have no choice now but to wait for my stop loss to be taken out or to trade. But again, it was a back test trade on a small account, 0.01. I must see the trade through. But for a sell stop, so when I see where your sell stop is, so your sell stop is at 130, something. 132.056. So this is your sell stop. Yeah, okay, cool. So you first want to see, and I think this was very smart of you. You actually watched them come up. Yeah, I appreciate that. Very, very smart play. You're not like me. I personally I wish to have opened another, so maybe I will actually a little bit higher here. So I might actually put a sell limit a little bit higher there because I know price hadn't arrived there yet. Just by looking at the daily time frame and just selling at the end here, number one. Number two, can I just quickly show you guys something? I've done this many times in war rooms with the distance between there to the bottom and then clone it. And this is why I have a big problem with this thing. And then take this to the breakout. See, markets to me want to remove this supply. Because normally if you get one of these triangle patterns, right, markets will go very parallel or to the same size. That's kind of like the other thing I forgot to show you guys on Bitcoin. Like when you're looking at trend lines, markets will do this. They'll go the equal length of this. So this is the drop to the bottom. This is the equal length from the breakout, right, up there. And so what you're looking at is the fact that you now know where all liquidity hunts will be. So even if I want to sell, I know for a fact that if I put my stop loss anywhere near this yellow bar and my area of value, I'm going to get hunted right before it drops. But if a drop happens after markets have removed the supply, how far would that drop go? Will that drop be significant? Would it be useful? Will price even bother coming down here, which is what I want? I would want price to do this so I can buy in with price. Then we can go up together forever, type of thing. So that's like literally what's standing in the way, Mr. Privilege. You could get a sell here. Markets could react that way, but you could also not get a sell. Right now, the other thing is on the H4 time frame. Look at this. Right. So as soon as your sell stop gets triggered, you're literally in the fight for your life. Right. You're literally in the fight for your life. There's a couple of demands that are going to stop you along the way. Right. So just remember that. So my answer to you is this looks like a high risk type of trade that I'm already in. And I regret being in it. Now it doesn't matter how small the lot size is. a loss is a loss, and I regret being in it, right? So right now, yes, I'm holding profits, and believe you me, if I wasn't back testing, I would wake up at midnight and just close this trade at $1, whatever profits it's in right now. It's because it's just not, for me, it's a sell, but it's not viable. It's not viable enough. Then you said on the same chart, you have a buy limit. Want to make sure I answer everything. On the same chart, you have a buy limit, and that buy limit is at 122.281. What just happened? Where's your buy limit? Okay, let's take this. I don't know what just happened. So your buy limit is at 122. Am I just confused? 122.281. Right. This is the last chart, guys. Sorry, but you know, these are 365 students, and they are my priority. Man, your buy limit is way far, all the way down there. Why? Why is your buy limit so far? It's privilege online. Buddy, are you online? If you're online, talk to me. Why is your buy limit so far? What are you looking at? The governor. Ah, all right, right. Okay, cool. That's far. It will happen, but not this year. I mean, it could happen. Nah, I don't think it will happen this year. Right, number one. Number two, the zone is a bit structured. So you actually want your buy limit at the top, right? We don't want to trade out of fear. When your buy limit is the top, somewhere there, and then you want to start to draw your analysis, because this will hit first. Trust me. So somewhere there, you want to do your multiple time frame analysis and find a correct demand, and then there start to align your stars. So let's look what the weekly looks like, look what the daily looks like. You want to align your stars there, but that's way too far. And then you want to decide, maybe, you know, be open to that, or wait for that and then be open to that much risk from there to there. Something like that, privilege. But right now, where your buy limit is quite far and your sell is a possibility, it's like a coin toss flip, right? If we get movement from that sell, that would be great, right? Because then we can at least come back all the way down here, right? But if markets privilege remove the supply, which I think is the all-time high on the chart, no, it's not. Right, so there's a supply here, and then there's another supply there. Oh God, you're stuck in supplies. But if the market removes supply number one, then you probably want to come wait down here, right at the beginning of the impulse. So if you check on the daily time frame, it will look something like this. Right, so you wanna see if you can take this demand here. So price comes back into it, and then you ride up. Sorry about the messy charts. But yeah, I hope that answers all the questions that I saw on the public Telegram group, guys. If that's okay with you, I would like us to get down now to the business of the day. If that's okay with everyone, answered questions, etc., etc. I want to look at a couple of charts. I'm gonna do war room style. Remember, from tomorrow, I'm gonna be dropping. See, it says October challenge. So it's gonna be, if you've never seen me do this, so there's an FX note. This is the one I'm most proud of and the one I completed. And every trade here went well. The second one, pound JPY, I lost $504. There was another JPY something. So all the JPY pairs on that plan, about 2 or 3 of them, I misread stuff and they all went against me. But this one was flawless. This was the first one of the year. So I'm going to do something like this for the challenge, right? So literally where to buy, entry point, stop loss, my take profit, my plan. And I put pending orders and I go play golf. I read books. I back test other assets. I don't manage. Every time I manage, I put myself in. If I put myself in, I'm no longer on autopilot. If I'm not on autopilot, my emotions take over. And when you do a challenge, you're always thinking, I might as well close at $500 than lose the whole bag, right? It's terrible trading. It's really terrible trading. You want your trading to be mechanical as possible, right? So these are all charts. You can come back to this stuff and see for yourself. All of this, you see the picture is there where price was at the time. Literally beautiful trade setup. So I'm hoping for, I never hope for a perfect set of trades. I mean, that would be nice, like if all the trades were perfect and accurate. I am much more hoping for me to kind of like get as close as I can to my target, right? And most of these stuff I'll be trading and recording them live for you, so we can have season 2 of how to 2x 5x 10x your trading account on the YouTube channel, and we can kind of like see what's going on, right? But the first trade for me that I want to look at, and remember, Tomorrow, I'm putting 13, these ones that I've done so far in War Room 38 and 39. So this is what's going to go in the remote course there. If you want to get access to the remote course, there'll be a link down below after I'm done here. Right, so the first thing tonight is Pound CAD on my list. I think I did a short video last night just explaining the charts that I want to look at, right? Pound CAD is the first thing on my list. It's probably going to be the same as USDCAD a little bit, but the difference here is the pound, right? So we've got the opposite, right? We've got some type of break to the downside now, which you can see I've been waiting for, right? So this is what these two lines mean. I've been waiting to see this happen for a very long time. The last time price made contact with the supplies over here, the pace is going to go a little bit quicker. I am not supposed to teach in war rooms, just giving out trade signals. I will be explaining my logic. I hope you catch me out. I hope you understand me. I hope I come out fluently. But I do have 3, 6, 9, about 12 assets I'd love to get through tonight, right? And I've got an hour left to do them. If we're going to finish at about 6:30, I've got an hour left to do that. So if you don't mind me, I'm going to be rushing through my logic. You will always see the polished version of my ideas here. I'll always give you a 5-line paragraph, entry point, true buy, and you always get the best version of my thought process in there. Because after I'm done with the war room, I get up at 4 a.m. tomorrow and I redo the stuff by myself quietly, calmly, with all the tools, right? War room is for those of you who are not in the academy or don't want to join the academy but want signals for free. At least you have a general idea of direction. Right, so for me, and I'm going to remove everything because new challenge, I'm not even in this trade. For me, guys, you know, I'm starting I really hate this, right? And you'll notice that this thing has the habit of doing this, but when it's done, when it's finished consolidating, when our Talitha areas have come to a beautiful end, you get an impulse, a very healthy impulse, right? An impulse that makes you money. You want to learn your assets. We call this profiling assets. We cover this in week 1 and week 2 of the remote course. So you really want to learn this stuff. You get, there's not BMT, whatever, you know, what's that BMT stuff, right? But it's quite similar. And I'm not trying to make fun of anything. I'm just simply saying this is not it because I don't really understand that BMT all the way. I'm a supply and demand trader. You're going to have to pay me trillions and trillions and trillions and trillions of dollars for me to change my trading strategy because it's made me quite a lot of money and I like it now. Right. So you can see every time I've got these large moments of consolidation, whether they are sideways or a little bit horizontal, like here where we've got like a much more downtrend, you know, etc., you get explosions up. And I've been waiting for this for a very long time. This one here really reminds me of stuff that I hate to see in the markets, right? And generally you can't do a lot of trading here. You can trade in ranges, but it becomes very dangerous, right? So this is it. So I like to kind of like blow up my charts a bit so I can start to pick, you know, get the highs and lows, get the understanding layer of the land. 365, you know, we always want to find our immediate areas of value. The stuff we do in module 1, week 2, week 3 in the remote course and the live classes is important for us to understand long-term direction. But now when we are trading, we want to know what on earth is going to affect me tomorrow in the markets. Right, so what's going on in this market in this week? So I want to do something like that. So I've got my immediate supply, my immediate demand for my governor. I want to double check the volumes. This supply is weak. Why is this supply weak? Because it really doesn't show, right? We don't really know how much it is. There's enough money to turn price in 2018, but it's not an area of value that they plan to keep forever, right? Another trick is to just go to your presidential chart, but read the free accounts won't give you that, right? Look at that. See these impulses after consolidations, clean, boom, buy. Where's another impulse? With another impulse here on a normal candlestick, remember this? On the 3-month chart, clean, right? So at the end of the day, right, there is moments of buying on pound CAD and banks think in 3 months. So I'm on the 3-month chart, take profit in 1 year, in a 10-year span. These guys will use 1, 2, 3 financial quarters. Remember, 3 months is one financial quarter. 3 financial quarters to slam dunk this thing, and then literally bought this thing back religiously, literally almost back to where they sold it from. You guys see this? This is wild. I love big time frames. You see this? They literally sold financial crisis, 2007, 2008, and then push price back to that same price. And they've been slamming it down again now ever since. And now we're kind of like consolidating here, right? So there's a little bit of consolidation, blah, 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 right? Let's go back to our normal candlesticks, normal charts, not get too excited and not teach, stay focused, right? So I essentially have no contact with my demand. The last contact I have is with my supply. So if you're asking me who's in control, my supply is in control. And I think I answered this question in class. I think it was Kakoma who asked me actually in class, right? And then we can scramble, scramble for money here. We can assume that there was a support supply created there, but then that supply is got, smells a lot like a retail trader's trap, given glass effect, but it's there. You can see it worked, right? It held on. Markets came in several times, right? Look at that. Look at that. Look at that, right? And so I've been teaching on this on the live class. It's so important to come once in a while, come back, because this is a concept that's new. I mean, you know how I label things. I come up with my own terms, but this is a bandage. When an area of value is about to give in, this is a bearish engulfing pattern on top of a very weak supply. This was not a bearish engulfing pattern, right? So this is a bandage to allow for continued sell pressure. And indeed, that's exactly what happens, right? So sometime this year, when the year started, they put a bandage on this baby, and now we are reaping the benefits. And my eye would be on the price there. That's what I would be expecting. I would be expecting somewhat of a facilitated downside move, and that's because the only demand available to catch price, according to how we trade, is exhausted. I mean, look at that. It's exhausted, right? Markets are sitting on a Blair toilet. Those rural area toilets, if your poop is too strong, too big, the water comes back. That's one of these buys there. You don't want poop water in your butthole, right? This is kind of like the trade set up in front of us here. So I would be very careful about taking longs. I'm not really into taking longs here, not at all. Momentum wise, there's no this. So I would assume that markets are leaving a supply going to a demand, but we need to break out of the range. Up until we break out of the range, we have problems. Right. So now scaling down for a potential entry point on the weekly time frame. Can't see much. Once again, if my audio is bad because the mic is shaky, I actually recently made a terrible video where the audio was bad and the mic was shaky. Thank you, baby. Guys, just brought me tea. I'd love you in another lifetime, girl. Thank you. Right, so let's see. Right, so we've got this situation here on the weekly time. So it's getting a little bit clearer for me, right? There's some commitment to sell at the beginning of the year. That's that bandage area of value that we spoke about. Markets came back in, sold, markets come back. Now 365 traders, specifically, if you've done the course or are doing the course, you take special note of this. You want the banks to tell you what they are doing. We want the banks to tell us what they are doing. What the banks are doing first is something that we can then repeat next. So we get an impulse down, a fresh touch. I'm actually wasting so much time on this chart, right? Long story short, it's a sell, right? Markets came back and sold, fresh touch, retest. I must remember my own rules. War room, not teaching, right? So price is leaving. Now, unfortunately, I can't jump into a sell trade right now. Unfortunately, I cannot, I can't justify a sell. Even though I know markets are selling, I can't justify a sell because of this. I'm going to need this to be broken. So when I say broken, I'm going to need price to come down, break of structure, and then I need a supply. And damn, waiting for that is going to be a pain, right? So let's see what the daily time frame is going to give us. All right, well done, daily. Daily time frame is plain ball. So if I was to do swing high, swing low, this is what I would do. I'd plot anti-Fibonacci. Right, so I've got some waiting to do on this chart. Hopefully, first week of November or something. A couple of impulses, strong big green candles will get you up there. But if I want to sell there, I was revisiting some select chapters of books I keep recommending because I use like a sticky note system, so I always come back to stuff. And it's because on Friday during the live stream, my daughter's awake. During the live stream of the senior traders, trading event that we do from about the London session from about 9 until 1 p.m. We're talking about how I've never specifically warned against this. I mean, I always say, do what the governor is doing. Don't do anything else, right? So the question was quite simple and very makes sense. Leroy, you want to sell there. Why can't we buy up here? Why can't we eat the cake on both sides? You know, why, if you're selling here and you're sure price is going to get here, and and the only way for price to get here is for price to come up, why can't we buy up there? Because that's just silly. That's why, because every single retail trader is going to think like that. That's why. So before markets can come here, literally to sell where I want to sell, markets are going to deal with you thoroughly. They're going to shake you off and shake you off and shake you off and shake you off. And then when you finally give up on guessing the direction of price, they're going to get to me. Read Currency of a Trader. I think my copy is far away from here, from about 120, where Barnes does it again with Euro USD, and he blows $5,500 because he's finally decided. He's met the guy who mentored JP Morgan's beautiful storyline. It's a very good book. I'm obsessed with that book. I'm reading it for the 4th time now. Literally, I can't get enough. Literally, the mentor, right? The guy who's been coaching all these great traders like 4 decades ago, like he's told Barnes he wants to sell Euro USD at about 1.2, right? So you know you have a target, but he tells him don't take the trade if you can't justify it, right? So don't take the trade because I want to sell it. And then Barnes realizes that, look, I can make some money going to that target. And what happens is he gets several. Yes, he's got poor risk management. I mean, that's obvious. You go nowhere in life with poor risk management. But the logic is flawed. Just because I want to sell there doesn't mean I can buy up there, because that's not the logic of price. Remember, guys, we're watching candlesticks. What are candlesticks? Printed orders, executed orders. So when you see a candlestick on your chart, that order has happened. That's why using indicators is predominantly going back in time and asking a caveman to help you create electricity. The caveman is still trying to figure out how to start a fire. Indicators live on prehistoric data. They are terrible for future testing, forecasting. They can't tell you the future because they're still digesting backward data. And the candlesticks in front of you, this is all printed. This is last week's buys or sells. Now, if you decide to start buying now, because the logic is markets are going to go up there, Monday's candlestick print downwards like this. And then you buy again, and then they'll print downwards like that. They'll break my structure, wait for break of structure, and then they'll come back here and stop right there. Your take profit is here. Remember, you've put a take profit here because you want to sell here. And then while you go into the toilet because you ate sushi and now you got diarrhea and you're in the toilet for 2 hours, markets get up here and then turn against you. By the time you come out of the toilet, there you go. Your take profit is not hit. You're now losing profits. You never counter trend unless you're a counter trend trader. And I don't create those. I never create anything that I'm not. So I can't advise you on counter trading. So for me, pound CAD, I'm buying there. For this challenge, I'm going to keep it simple. I'm going to be using basic setups. I'm going to be using module 1 entries. So there's going to be a lot of daily and H4 confluence. Why? Because I actually want to come as close as I can to $16,000. So I don't have time to be fighting with intraday traders. I want the full swings, right? So this is what I'm looking at based on what price is giving me right now. Just for those of you who are interested in counter trading, USDCAD has arrived at a demand. I don't trust it. And if it holds, even better, because I want price to come to me. Those of you are not going to get access to the remote course to get access to the trading plans of all these trades I'm taking. Here's a tip for you to use by yourselves. If markets come strong, so if the next candlestick on Monday is like this, bam, it's that big. And the next candlestick on Tuesday, bam, is that big. I'm going to delete that order, all right? Something you need to learn in module 3, blah, blah, blah. It's called accumulation. I need markets to accumulate. I need price to shake off those traders who are trying to buy while my governor is selling. The best way to do that is to see price actually trade in zigzags, right? I want to see some accumulation before markets get to my supply. I don't want 2 or 3 green candles. If you see a green candle like this, 1, 2, you are literally not trying to stop a moving train. You're not Clark Kent, right? This moving train is going to go through you. This is a sign that there's been a lot of buyer momentum, that this is not the best sell high. Banks are not, it's a valid supply. It meets the rules. But I'm telling you something you don't know. You need to wait for market accumulation. You want to see price build up to you. You want to see price woo you, seduce you into selling. You don't want to, let me not even go deeper into these examples. You simply want a situation where markets are going to take a little bit of time, right? So this is a daily time frame. So you not a lot of days, but you can't have 2 candles, 2 big bullish engulfing pattern candles exploded into that supply. I won't take that trade, right? So pound CAD, I'm happy to sell there. All right, this is literally going to be one of those trades I babysit because we have to wait. I have to wait and see what's going to happen in terms of price. But right now, do nothing. I don't want to go to H4 to see what's going on. See there, price is going to come back down. This is quite a big bearish engulfing pattern. So, this could happen. One scenario, or this could happen. Scenario 2, and I never even get to have my sell. How unfortunate, right? But if I'm going to sell, I'm going to sell up there. I'm going to have 2 positions for the challenge. I'm going to have 1 position right here inside the H4 supply. This one, because of how close it's going to be for my stop loss, might be a slightly bigger lot size. When I say slightly big, don't use your imagination. I'm not a big lot size trader. If you've known me for a while, I don't really care for big lot sizes. I make money by holding my positions in safe long-term trades. I allow the markets to compound for me. I don't try and shotgun the markets, right? So I can have a 0. I don't even want to use examples because it will give people. I'll have 0.01 here. Right? The reason for that is because the area of value is quite big, right? So this is not, well, let's see. From my entry point to my stop loss, that's what I am risking. I'm risking 163 pips. Let's get up the pip calculator. It's the only chart I'm going to do this for, guys, because then time, time is moving. Why is the YouTube, why does it cut my screen? The screen that you guys are seeing, you guys can't really see everything. Should I remove my face? Maybe that's in the way. Right, sorry. I'm just watching. Can you guys see my screen clearly? Can someone just tell me on the YouTube chat if everything is good in the hood? Can you guys see my screen clearly? Are you happy? And if you're happy, I'm happy. Right, so it's 163 pips, just to show you what I mean. So it's 163. I mean, in one of the videos of risk management that I told you to do, I teach on how to use this pip value calculator correctly. So I won't be spending time on it teaching you. I'm just going to move on. Since I want to confirm that you guys can see my screen nicely, right? So this pound CAD, and I say it's 0.01. So if you're at $100 US, if you literally at $100 and you want to take this trade, you'll be risking $11 at 0.01, right? That's 11% of your account. And I'm saying to you, if I had $100 US and I was taking this trade, I wouldn't take the trade because the trade cost me $11. But let's say I had $300 or $200, then I could take the trade. I'll take 0.01 here, and then here on trade 2 by the H4 higher supply, maybe enter it like that, right? There, I would take maybe 0.02 because of risking. I'm risking less pips. I've reduced my risk setting. So this is now 95 pips at 0.1 is like, $7, give or take, right? And in total, you're risking about 18 to $20 US, which is good for a $200 US account, not a $100 US account, right? So this is literally the risk management I would be applying, the logic behind it, right? It's not about lot sizing, it's about process. Can you hold these trades? Can you keep these trades? Can you make money off these trades? Charts are clear. Thank you so much. Fantastic. Right. So that's pound CAD. I'm going to write it down. I'm going to make a note here. This is now war because tomorrow's uploads on clean signals on the remote course will be based on war rooms 38 and 39. I don't want to conflate stuff. And I'll do a final war room on indices because I know the last one I did I only showed up for 2. So for war room 40, I'm just making notes here. We now have USDCAD, that sell idea that I spoke about. I'm more prone to sell USDCAD, and I'm more prone to sell, interesting enough, pound CAD, right? And for now, it's just That's really all I see. Again, if oil is going up, we expect CAD to be strong, right? We do expect CAD to be strong. So we shall see. We shall see what will happen, right? So NZDCAD is the next chart. NZDCAD. Ooh, a lot of CAD pairs here. Oh yeah, I got T, by the way. Aha! What happened here? Can we just quickly assess the notes on this thing? All right, so it's a weekly demand with little to no confluence. Markets came all the way down to a governing demand, which is what's going to happen. So as a teaching chart. I mean, I would make this a little bit tighter like that. And just by doing that, I'm insinuating that price is still going to melt a bit more. Right, so this was a perfect entry for a daily supply, weekly supply. That's what all these codes mean. But this weekly demand didn't hold because again, my governor clearly is selling. Right, so the weekly demand, damn, the weekly demand was taken out, eh? Interesting. Well, it's not too surprising. So really, I want to look for a sell off the bat. I know price is going up. I want to sell because my governor has not yet been activated. So let's use the same chart. Let's just remove all these beautiful notes, create our own, right? NZDCAD, right? So let's start again. I do believe there's still some momentum to the downside that's left. Oh, maybe I'm wrong. Maybe I'm wrong. Yeah. It's not a nice clean chart, man. You know, it's really not a nice clean chart. And overall, it's a buy profile asset, right? That's easy. Buy profile asset. Right, what's going on here? On the governing time frame, I want to match some demands here. All right, so I found some strong historic confluence. Got one crack at that windscreen, second crack at that windscreen, third crack went nice and deep, right? And this is all part of what we teach. Now, where's price in relation to the historic demand of 2013? Markets are way too far from that, but markets did do a quick snappity doo turn. But the last time markets did that here, for example, you see this? This is why you have to do it, because it works. Ugh, man, I hope I'm not talking to myself. Hope you guys can see what I'm doing. I'm saying to you, even though we've got this main demand here, every time markets came back to price, you see that there? See that there? 1, 2, deep. Right? It's not a video game, guys, right? You can see that, right? 1, 2, the third one is deep. Here we've got 1, 2, third one deep, right? And then we know that's going to happen in the fourth one. It's going to take out the demand. Take out the demand, right? So this is interesting, right? Now, if you do my module 2, you will then when I'm now happy that you now understand the basics of supply and demand and everything, we start to talk about important tools. A lot of traders abandon that stuff. I don't know why. I feel like once you learn supply and demand, you're good to go. No, market structure is supply and demand. Price is everything. That's why I start off with that. So look at this, right? That's a high, that's a lower high, that's a lower high. It's a lower high, and then markets kind of like went up a little bit, right? So the process is we've been creating lower highs, and then let's look at some lows. This is a low, this is a lower low, this is a lower low, and this is a lower low, right? So this is a downtrend. We're in the middle of a dead smack downtrend. Okay, we are in the middle of a dead smack downtrend. We're in the middle of a downtrend. I want to understand the powers at B. I want to make sure that if I decide to buy in the middle of a downtrend, I don't get locked up in a mental institution. Why? If banks are selling, why would I buy? I sell with them. So immediate areas of value. We've got something here. We've got something there. Markets did create a beautiful supply for us. Why am I not in this? I don't know. All right, this is February, right? So I hardly ever trade. So your guys' December, your holiday, that's my March. I don't know if people know this. I take 10 days off in December. It's the most annoying thing in this house. And out of those 10 days, 3 of them are work holiday days. So I'm still working. So it's 7 days. And then in March, I disappear for like a month because that's my December, because I move from financial quarter to financial quarter. In February, I don't take a lot of trades because I move all my caps into the stock market because generally speaking, NASDAQ, S&P 500, Dow Jones, the psychological of those markets is they must beat the previous year. So January must always start off on a high note, right? Because if you're going to start counting from Jan to Jan, it's like it has to be like 45%. So that's when I make the most from the stock market in the whole year. Those first 30 days of the year, right? This pump, and then I break down the accounts back into FX. But maybe that's why I missed it, or maybe I just didn't care for it. But that's generally like how I think logically, right? So there's a touch there to our supply, and then markets seemingly try to come back there. All right, that's fine. And now we now know we're in a downtrend, right? That exercise wasn't for fun. We now know we're in a downtrend. What we want to figure out is if we're going to be played for fools. We can literally see on this candlestick charts all these lower lows and higher highs being formed. All of this, don't ignore it. It's right there. It's telling you something. The stuff that retail traders do is we generally move on assumptions, and when we move on assumptions, we mess things up, right? Now, let's confuse ourselves a little bit and create a channel. I don't know if I can touch all these beautiful wicks, but that's what the channel would look like, right? Something like that. Doesn't have to be perfect right now, but we've got a situation like this here, where markets are starting to close on the other side, right? And we've seen this a lot, Euro USD, Pound USD, anything NZD, right? All these risk-sensitive assets are removing bearish structures. 2016 bearish structure might have come to an end, but they need a demand to sustain that. So I have a buy profile asset, you know, in general, buy profile asset. We saw that on the 3-month time frame, but it's also been in a downtrend since 2016 until recently when it broke structure. Not perfectly, didn't close above, but there's an argument here. Definitely broke this structure there and closed above this. Definitely broke the supply here. Definitely, right? So NZDCAD is desperate for an upward move. I don't know if it will get it, right? We need to assess that, but we know that, you know, in terms of money, capital, right? Goodness gracious, we should look at COT reports when we do these war rooms. But who would stay for a 3-hour war room, right? Because that takes time. But if I pull up the COT reports for NZDCAD, can I just do that for this one asset? My FX book for just this one asset. I know people need to go home and sleep. Oh, yeah, you're probably already home. Sorry, but you get what I'm saying. Let's just start with NZD. I'm going to look at this past Tuesday for NZD. This past Tuesday for NZD. Non-commercial positions. That's who we want to trade like. Want to trade like the banks. This commercial positions are for hedge funds. You have to understand how different people make money in the markets. Everyone here is going to make money, even though they're all going to do things differently. Hedge funds hedge. Hedge funds, they hedge. So they go against the grain. They want to catch the slip-ups, right? Don't worry about them. Focus on non-commercial positions, but don't look at these numbers then go run and place a trade. Let me first teach you on the stuff properly, or take my module 3. All right, because it's all there. It's all there. But look at this. On Tuesday, it comes out every Tuesday. So you'll notice that on the 12th, I don't know, but I'm assuming it was a Tuesday. Normally on a Tuesday, yeah, there we go. The 12th was a Tuesday. So on Tuesday, we got to learn. Now, it's historic data. Be careful now, because this Tuesday, we're going to see what they did this past week. This Tuesday, the 12th, is telling us what they did the other week. And at that particular time, there were 37,340 open interests, right? So in total, the number of buyers and sells institutional wise. And out of that, we had 20,000 long positions versus 11,000 shorts. Remember, banks buy and sell at the same time. Let me not say remember. If I haven't taught you, you wouldn't know. They always buy and sell. If I have a hedge fund and I've got 10 million bucks, I'm going to use 7 million to buy an asset, 3 million to create a market condition to trick retail traders to sell. So if I'm buying, I need money right, to create those things that retail traders see, those trends, those stupid indicators, everything that you see, for you to also start to sell, because I know most of my money is hedged towards buy. So they had more buys than sells. Long story short, in terms of hedging, it's going to be different. They're going to have more sells, shorts, see, 20,000 than buys, right? And then the nice averaging, man, I have to download the CSV, it will take a lot of time. But anyways, if you get an average number between the two, you'll realize that in general, right, the buys are going to win for now, right? In general, if you're to average this, that, this, and that, the buys will win, right? Non-reportables, not important. Dealer positions, liquidity providers, not important, blah, 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 right? So for me, in general, when I look at leverage fund positions, there's a lot of long positions on the table. Overall, a lot of long, but if you do a manual calculation to be exact. So when you come back to NZDCAD, and NZDCAD is floating on top of a demand on the other side of structure, which was a downward structure, you can then see, someone says finally COT at play. I have a long list of content I need to produce. It's just that traffic is slow, but maybe I should just make time for it, man. I should make time for it. But COT, Alvin is already there in module 3. I do there's going to be a two-week SWOT week on how to accurately use COT, right? So you guys will see all that stuff. So don't worry, if it doesn't show up on YouTube on time, because I'm still so behind with the videos for YouTube, you guys will get, the registered students will get access to COT reporting properly on the remote course, right? So just let that go, right? But there we go. We are still on a demand, and naturally you can see this past week, right? You can see it says candlesticks. The week started on the 11th. 11th was Monday. You can see it was a green week. This past week was a green week. Why was it a green week? Well, we had more buys and sells on the table. Okay, simple, right? And now, if it's a green week, that's nice. But is it a green week leaving a demand to a supply? Because sometimes you can just have a green week, but it's not in touch with the demand. And right now, it's difficult to read this area. I mean, you can average it out, but it's very difficult, right? So there is some type of bottom here, so to speak, supply and demand number 5, right? And the imbalance is given out a little bit, but I'm wondering if this is going to be the strength, because you see, buying momentum hasn't kicked in. It looks, it's a green week, but buying momentum is still red, right? So be careful, just be careful. So that's why I'm saying, wait for me to teach COT. And I'm so glad, you know, most students are very passionate about different things in the academy, and you guys want module 3, I know, but just don't use it just recklessly, you know, just as yet, right? So I would be comfortable buying here. This is me in general. I would wait for this. So this is where, because there's a challenge, we're running out of time, right? So you see on the daily time frame, daily doesn't care. Finally, we've got momentum on the daily. So if we get more momentum for this week, then we'll start to see green here. I would want to buy a little bit lower. That's just me personally. I wouldn't want to buy now. Number one, where are you going to buy now? Markets have left a valid demand. So if you take a buy right now, by the way, cowboy traders, because I know you're there, you better have a stop loss this big. So and it's not that expensive. You could handle it with a decent account. It's 131 pips. So let's start to see 131 pips. Let's say on NZDCAD, right? NZDCAD, there we go. And let's say you got a $300 US account. So let's say you want to go 5%. That's easy. That's okay, fine. So maybe cowboy traders could win, right? So if you're on a cowboy trader, you want to enter the markets on Monday, good luck. That's where I'd put my stop loss. Make sure your stop loss is all the way down there. I'm not going to do that. Why? Because on the daily time frame, I see this. And I'd like to bet that I can find a supply here. See where my arrow is? Ah, man. I would like to bet hardcore money that I will be able to find a supply somewhere in there. That's why I have no interest in buying. H4 chart, boom. It's only because I've seen this happen many times, right, guys? The difference between me and you is fundamentally time spent in the game, right? So there's not the best trend line in the world, but it was easy to pick up that on the daily time frame, markets betrayed themselves, right? So if I was to draw it carefully now, from point A to point B, this being my point A and that being my point B. I just follow the line, it breakouts, stop loss, hands, blah, 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 trying to buy there. And then markets closed on the other side, and then markets created a bid, right? A serious bid of sellers. So somewhere here is a strong supply. It's not the strongest, but it's there. And why? Remember, if you're buying on Monday, I've shown you where to put your stop loss. You're literally entering here and your stop loss is out there and you're buying into a supply. It could work. It could be the buy that breaks the supply, but I don't trade like that. I don't buy when it's time to sell and I don't sell when it's time to buy. Here you can see markets, when you use proper candlesticks, you can see markets are already leaving the zone. Right, markets are already leaving a supply zone. So there's this up here, which was then that, all right, and then that consolidation point left also this over here, turning point, right, which came back to retest that, and then this is markets leaving now. So this could happen tomorrow. Tomorrow is what? Tomorrow is Monday. I'd use something simple like a heat map. Do you know it's actually raining in Grahamstown? Like the summer, the weather in this silly town is just beyond. It's raining, like it's cold. And the weather completely changed. I mean, I was outside today. Right, so watch out for that. I mean, this is what I would wait for. I would wait for this, and then I need to see, are you taking this out or are you taking this out, right? But two areas of value, none of this is, we can't get a trade here, guys. Please remember, risk reward ratio. If you are selling, if you open a sell position at midnight there because you believe you need the markets or your money, once again, your stop loss is all the way up there. And there is no risk to reward ratio because the next time price can turn against you is down here. All right. And if you want to buy here, right, you have to cover this whole area, which means your stop loss is somewhere down there. And if you're taking a buy down here, you know you have to stop right there. None of these plays are risk reward ratio friendly. And that's just it. You have to time the market. Me and you should have been inside this particular thing on the 6th of October. This is why I'm a swing trader. Not every day is a trading day, but on the trading days that are trading days, baby, you make your money. You make some serious money, and it's safe money because my stop, and I seen this on time. My stop loss have been out there. My take profit have been anyway inside here. That's good risk reward ratio. Right now, because I missed this entry, I'm out. I can't take this trade. I genuinely don't want to lie to you. There's nothing for me to do on NZDCAD with my trading style. I am a slow, low-key, consistent, low risk trader. That's what people come for me for. When I say people, I talk about corporates. I don't trade for individuals, right? And now on the daily time frame, this is it. And you see, no confluence that H4 demand. That's why I'm not keen to buy. Yes, COT put in longs. Yes, we're starting to see those longs operate. But what you want to do is with COTs, by the way, you want to download the CSV. The CST COT model 3 requires a trader who's mastered the basics and is now disciplined. That's why I am trying my best to procrastinate access to this for as long as possible, because a lot of traders are not yet, they know what they're doing, but they're not disciplined. Those are two different things. This is a lot of work managing. If I show you my COT, I've got one Excel spreadsheet from 2019 June, or when I do the videos, or when you do module 3, you'll start to see, and you update it every week, because what you want to catch is, it's not about reading the report and then that's enough. That's not enough. You want to see them cool off or heat up. So you want to look at 20,000 longs in relation to the other Tuesday's orders. Did they add, was last week's Tuesday's 18,000, and then this Tuesday, the 12th, 20,000, because then it means they're growing, they're adding to their longs. Or was last week Tuesday 25,000? And then you're looking here going, there are more longs than shorts, but they're cooling them off. Right now it's 20,000. That's what you wanna, that's the whole point of COT, right? So let's quickly do that exercise together. So this is 20,000 on NZDCAD. Let's look at the previous week. So let's look at how the month of October started for NZD, which is Tuesday the 5th. NZD, 17,000, right? So you see they're growing their longs, right? Because on the 5th, it was 17,000. and now it's 20,000, but that's 3,000. But again, too early for a conclusion. Look at this. Their shorts were at 9,000, right? Am I right? Yes, their shorts were at almost 10,000. This is 9,000 and 9,800. And their shorts also increased the following week to 11,000, right? So it's an equalizer. Anything goes right now. So on my spreadsheet, I'll teach you how to do it. There's a call off, medium turn, do something, period. Some of these orders are just to maintain balance. If they're going up a little bit, let's increase the sells a little bit. This is just to keep retail traders trading support and resistance. Because when you do that, when you increase the temperature up and you increase the temperature down, you create a range. When you create a range, retail traders have fun all day, every day. When retail traders start to have too much fun all day, every day, you start to psych them out. For example, over here and over there. Look at this. This is not random. This is on the 8th of October. There's a high, there's a low, there's a boom, there's a ding. It's like every single time. Man, I mean, I could do a series on retail traders. Now, what's going on here? There's a strong supply. Price barely touches. If that was a resistance, look at this, taken out. Right. If their stop loss on the other side. That's all they're doing. They're just simply equalizing the markets so that retail traders see what they want. On the 1 hour time frame, you can see we are so late for the party. We are so late for the party. Markets have probably engaged this and a little bit of that. So it's actually more of this, right? They've engaged that area of value just all the way down there. You get the point, and they're coming down. So we're gonna have to see what's going to happen there. Man, this highlighter is ugly, right? So NZDCAD, guys, move on. Let's not waste time. But at least we got to see COT reporting, in a brief snapshot. Next chart is USD Swiss franc. So I'm not going to write that down in my trading plan because I don't see a trade to plan, right? I'm going to revisit these assets every week, of course, but I want to make sure I know what I want. 10-year range broken downside. I mean, you have to hate this stuff. You honestly, when you trade long enough, this is the stuff that just drives you mad. Right. So anyway, there was a long-term market range here. That's what I'm talking about. It was finally broken after 10 years. 10 years is quite a significant number in the markets, and it was broken to the downside. So once you break structure, you finally have a direction. There's this situation here where markets broke a demand to touch a demand, but I'm not yet sure. I don't remember. I couldn't find any news articles around it. I just don't know. It's hard to tell. Was this a news crisis? A crisis for that day on the 15th of in January 2015, sorry, or was this a valid break of a demand? I don't know. What I found interesting was the fact that markets then acted like the demand was there and bounced back up. That's why I have both zones drawn up. Right, I don't want to trade this at all. I don't trade markets that range forever. This is a ranging strategy, perfect for support and resistance if you know what you're doing. And then when markets got up here, eventually they gave in, right? So it's not something I want to swing and hold for dear life. But if I was to do that, for the first place where there's real clarity is the weekly time frame that's currently consolidating on a supply. And we know that this can pick up. This could pick up to the downside a little bit. This could really pick up a little bit to the downside, but it's still early days. I mean, markets are just hovering, and I have a negative relationship with this chart, right? But if this is the distance between touch 1 and touch 2 of the trend line, so I'm going to show you something. I'm going to plot an information line, then I'm going to draw it all the way to touch 1. Right, so what I've just done is simply marked how long it took for us to get a touch on a correctly drawn trend line. This is a correctly drawn trend line because we're using structure, right? There's some retail trader trend line stuff that are nowhere close to correct because they're not using structure. So now I'm just going to take, I cloned it, and I just want to see the next distance, right? So I'm trying to measure in terms of equality, distance from touch 1 now into the future. Does that make sense? So I need to get this right. There we go. Right, so I want touch 1 there. I've kind of like messed it up a little bit, so I'll just reduce it. Right, long story short, touch 2 is somewhere there. Right, so you clone them and then you put the second one at the beginning of touch 1 into the future. Right, so something like this could happen here. Right, and it could go up or it could break. Right, so that's just my area of interest somewhere there. And if I look carefully at my area of interest, normally if you do this correctly, you'll get some type of confluence. And you can see there's insider demand. So most likely markets are going to do that and come back up there. So I'm not excited about this trade. I'm not. And that's just me, guys. I don't mind trading one chart the whole week if that chart's going to give me good money. I honestly don't mind. Tomorrow is Monday. A separate thing I'm going to do on the war room, guys. I'm going to do it's too much, man. But there's no time. There's no time, and I can't keep creating courses and courses and courses forever. YouTube is a good vehicle for me, so I'm going to use it. I read somewhere that someone said forex goat. So I don't even consider myself a forex goat. So I don't even know why I bothered to take time to be offended. But someone said forex goats are using YouTube or something to generate more money. Or it's one of those, you know, what I call petty comments, right? YouTube is complicated. The algorithm is messed up. I need 4,000 watch hours and at least 1,000 subscribers for me to make $10. By my calculations, YouTube will pay me $10 the very first time in another 18 to 2 years. So if you think me recording videos and creating content almost every week for the last 3 or 4 months now and into the future for the next 2 years just to get $10, it's bizarre. Like, people just talk out of their asses. I mean, excuse my language today, but it's just weird. I'm using YouTube so I can put everything I know to help those who want the help. It's that simple. I am nowhere close to being monetized. You can see how many people are subscribed to the channel. They weren't talking about me, but I just took partial offense because I think it's just dumb. It's a dumb assumption. But what I'm going to do tomorrow, Monday, is I'm going to give you guys something that no one knows, because supply and demand, I was taught by a couple of people. Let's move on while I talk. USD Swiss franc, not much play. I don't want to force a trade. I do not want to force a trade. You see that there? See that there? Right? I could sell. If I trade this thing, I'm gonna sell. Remember, it was ranging and it broke to the downside to sell, so it wouldn't be too shocking. I'll still be in line with my governor, blah 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 blah. I could sell, and if I sell this baby, I want to come down there, because generally speaking, when you break a trend line, you make an announcement. This is starting to look a little bit more attractive. Let's dig deep. Missed the entry. We missed the entry. What do we do? What do we do? What do we do? Is it worth it? I want to sell now. See, I should have just kept talking and moving on. I'm going to tell you about what I want to do tomorrow on YouTube, but I should have just kept talking and moving on, because now I really want to sell, because this is just one of those trades. You never want to ignore rule-based trades. I think I explained this in class the other day. Your trading journey is based on how many trades you take over a period of time, and you average out. The more rule-based they are, the better. So if I open a sell trade, my stop loss has to be well and above there. So I'm risking 82 pips to make 180. Is that good risk to reward? 8, 16, 24. For 1:3, I needed to make 224 pips. So I'm in trouble now, because this is not a good trade. What would make a good trade was for price to come back up here. And anyways, this area, okay, maybe my stop loss is a bit too high. Nah, it's not too high. It's you know, it's just not straight. Yeah, so my stop loss will be somewhere there, 86 pips. Yeah, so it's not the best setup in the world, and I wouldn't wanna. We should have sold immediately here on this green candle, right? Had we been away, guys. Registered students, what's going on? I ask as if I have a right to ask. I know I dropped the ball on this one. What's going on with the captain's program? Are you guys waiting on me again? Are you guys kind of like started? Are you guys waiting on me for the Discord, or is it just people got busy? Because that's the whole point of captain's program, right? Whoever was in charge of USD Swiss franc or USD pairs, right, would have alerted the group, because this was a clean trade, right? So if we're lucky, so now I have to create conditions to sell. I have to go to the 1 hour time frame. Man, oh man, oh man, oh mano, imano, right? Price is gone. Price broke structure, confused the hell out of a lot of people right there. and then went up, and then we wanted that to retouch or at least touch the supply, didn't make it all the way to the end. So what I'm going to do with USD Swiss franc, this is one of those trades where I want to be in it, but I might never get a chance. I'm going to put a pending order on the area of value. So I'm just going to be very textbook about it. Right, and I'm going to assume that this is a fresh touch because it's close enough. It's really close enough. You know, I'm not even using the wick of the reasonable body. I'm using the wick of the bigger candlestick, and that's where the contact was made. Right, so that's happened. This is a valid touch. Price touch the supply. Price is gone. This is legit. Right, so I'm gonna leave a pending order there and hope for the best. I don't think price will return for me. If it does, even better, right? So if this happens, then it goes down with me, even better. And then on the risk to reward ratio front, remember, if I'm taking a trade here by this entry point, I'm now risking 46 pips to make 180, right? So that's not even to make 180, because then my pip count goes up, and there we go. So 40 pips to make 214. So that's almost 1:5, so that's even better. So if I'm going to lose money on this trade, I'd far much more rather die on a bed like this than anything else, right? So I'm definitely putting down USD Swiss franc. It's a pending order for a sale, right? Now, like I was saying, tomorrow I will do something that no one says. That's why module 3 takes forever. Supply and demand. I was taught by a lot of people, like amazing people, terrible people, waiting for you to get senior traders involved. Those guys are not coming until the channel is 3,000 people, bro. That's because then we're going to do a podcast around that. And one of them wanted to be paid for their time. You know, it's like an amazing group. But I mean, I've got 108. I know some will show up because I think the one guy in Cape Town has just been funny and been snobbish. But we have to kind of like grow the channel a bit. And I think it'll be good morale for them, because no one wants to be the first person in a podcast. Generally speaking, you want to be a guest on a podcast with 100 and something episodes. So whenever I'm a guest on a podcast, my team always asks how many episodes they've gotten in for traction, blah, blah, blah. It's like weird rules of the game, but yeah, hopefully they'll join us. But yeah, guys, this is a good place. Tomorrow, I'm going to do something that I hardly ever do with senior trail, but when I do them with them, I've never given it a name. It's called scenario analysis. If you can master what I'm going to do tomorrow on US 30, Dow Jones 30, I'm going to do it live, or not live. I'm going to upload the video on YouTube. You should be well underway. You must have one asset that you master while you master all market mechanisms, right? So just watch out for that. It's going to be scenario analysis on the Dow Jones. It's a lot of work. It's thorough back testing. I mean, I can tell you things about the Dow Jones, NASDAQ that a lot of people don't know. For example, if markets don't close above the high on Monday of the Dow Jones and it's Thursday, I can guarantee you that markets are going to sink lower. Friday, for example, US 30. You gotta fall in love with data. If you love markets, you have to love markets. So if price struggles on Friday, let's remove all of that. If markets struggle on Friday, see, this is Friday, the 5th, this is Thursday, so they have no problems. But if markets had closed below Thursday and struggled to complete its journey, markets were gonna fall. I mean, right now we're in a supply, so you know anything goes, etc., etc. So just look out for that. It's a in-depth analysis on the history of Dow from the beginning of time, just to prove to you that this thing repeats itself. I mean, where's my clone tool? Where's my clone tool? There, go sweet. Right, so one could expect something like this. You can see the Dow Jones generally has a tendency to move like a currency, right? It literally duplicates itself, right? And if that's something you're looking for, then that happens. So now I'm like, okay, on the daily time frame, what's going on? It's just a projection, right? It's a rough projection of that I've just literally drawn out, right? So if markets were to start leaving from there to there, I would want to know, why would price bounce here and bounce there when my demand is somewhere down there and there's a gap down there, right? And if that happens, I go to 1 hour time frame, you can find your demands, right? There you go. So it's actually fascinating, because you know at the end of the day, a good strategy must have what's it called, proof. proof in the pudding, right? So anyways, I'll drop the video tomorrow. It's very important. I'm calling scenario analysis, and I've built that in. That's technically the backbone of module 3. And I needed to work in every single asset. So a lot of you guys, I know it's been a while, but you have to imagine back testing every single stock, every single forex pair, every single index, and still running everything else that I'm doing. It's taken a lot of time, and you can't rush it. I have to do it myself. I can't ask someone else to do it because they don't have everything in my head right now. But yeah, pound Swiss franc, is that where we were? I think so. Pound Swiss franc, guys. So I'm going to stop talking now, and I'm just going to start analyzing because we are behind time. I'm going to go a little bit faster now, But I hope you guys, hope this has added value to you. If it has added value, please do like the videos if you haven't yet. If it has added value, like. If it has not added value, then obviously no pressure, no worries. If you are still watching and you're very unhappy, feel free to dislike. I think that's how that works, right? Right. So, you know, I don't like what I see. I hate Swiss franc pairs because of these long wicks. In fact, I have a tendency to avoid them. Why should I be forced to trade something that's not going, that would do such things, right? So there's some type of bottom here. It's not even the cleanest demand, because actually if you draw a demand right now, we are literally in a demand, and we've been literally in a demand for the longest of times. All right. So what's the value-based assessment, right? Since September 2011, we've been literally just digging into the demand and spiking out of it and making our way. But it's clear as day, this is a sell profile asset, clear as day. Markets have been dropping since Kingdom Come, etc., etc. So the bigger play is obviously to the downside, but we don't know what season we're in this market right now, right? So I can tell that a far much more correctly drawn point A to point B trend line will do something like this. And it creates assumptions, right? The assumption is, oh, wow, markets might be exploding up, between now and December. And that's a possibility. Unfortunately, because of lack of clarity, due to the lack of, a demand right there, I can't tell, because sometimes price will break trend lines to create like a downward trend, just to create a new downward trend like that. Like you'll see this happen many times. So I can't really rush now and assume markets are going up. Drawing immediate areas of value for me right now will not be the most useful thing, right? We've got a supply there, sure. If you don't know why it's a supply, please feel free to check out our remote course. All my pre-recorded lectures, over 60 hours of me walking you through the stuff is in there. And if you join the remote course, remember you come for free in every single live intake after the current one. So you can't come now because you'll be confused. You're more than welcome to come now, but you'll just be confused because of where we are. We're in module 2. But definitely when I do a live call feed next year, you never pay again. You literally just show up for the live classes. Right, so we've got something like this, guys. This is literally the COVID recovery, like all other risk-sensitive assets, pound, euro, AUD, NZD, all of them they bottom out here in March, and all of them want to push it to the upside. So right now, this looks like this. Right now, I mean, I'm not sure about it, but that's what it looks like it's going to happen right now. I don't think I'm going to trade this. I can tell you that right now. I can tell you that right now. On the weekly time frame, when we're starting to draw our golden thread, we can see that we've got a lot of interruptions along the way. So right now there's that. Markets are obviously feeding off the I guess the psychology of sells here, and eventually ended up creating a resistance, but the true supply is slightly higher. When markets are sliding, as they rev it up, going down on a downward trend, nothing much to catch it, very far away from reality there, right? One would argue that there might be a demand in there, potentially there is. I don't like it, but it's potentially there. And on the daily time frame, we have this situation, right? So daily time frame for me, because it's generally where I'd want to enter, is a good place for me to start clearing up the FUD, like what's actually going on. So I'm going to look at market structure. I've got a high, I got a low. I got a lower low, got a lower high, and that gets very weird, equalizes, that gets a little bit higher, still technically lower, but higher. This is definitely lower. And there's now another lower high. This is definitely a lower low. And then this is almost an equalizer, slightly higher high. And all of a sudden now I've got higher lows, right? So markets are starting to change. I don't know. It's a mess. But if one was to look for a true sell, the true sell might be in contravention of what the governor is doing, but you might still make some type of money, is to wait to sell all the way up there. Right, perfect imbalance, beautiful. So remember what I said was, you don't want a green candle just exploding into the area of value. You never want that. What you want, however, is markets making their way to you, wooing you. So all of a sudden now there are these higher lows forming, right? So what would be nice is we see that and then there. So I'd want to sell here, but it's going to take forever, not ever, maybe another 2 weeks. So I will put a pin in order there. That's me. I'm going to put my pen in orders now. You put your pen in orders based on your account size, okay? And what I will do for those of you who are not part of the remote course or won't join it or whatever, is after all these ideas are done, I'm going to create a watch list here of all the trades that we're going to take in the challenge. And then I'm going to screen grab that. And then you can kind of like work out all my entries and stop losses there, right? So maybe hopefully that will help, right? So I'm going to clear out this watch list. I'm pretty sure I'm done with these trades in here anyways. Some of them I took, some of them I didn't. And then my watch list will be purely be made for the signals that we're doing, right? So there's some type of sell potential here on the daily, but it's dangerous because I do think there's going to be some upside. So I'll be risking very little here. You'll see me say on the trading plan, you know, sometimes I grade them. I don't know if there's an example of me grading signals. I don't know. Nah, okay, I didn't do a good job of grading them, but you see me, I'll grade them. I'll say C class trade, B class trade. C class trade means, look, it's not the best type of thing. And I think I give you a summary here of grading there, grading system, blah, 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 blah. Right, so I will have something similar that will explain the grading system, right? So pound Swiss franc, nailed. NZD Swiss franc. I left the worst charts for last. I hate Swiss franc. Right. Looks like markets are playing ball. Really can't see anything. Let's remove all this stuff. Okay, seems like once upon a time I was expecting price to come down. Markets then spiked down-ish and stopped here. All right. And then that just makes this area of value this big, which makes a lot of sense. So market set on the demand. Okay, I would have preferred most likely a lower buy knowing me. So I didn't take the trade. And then now markets are on their way up. I'm going to delete this. I'm going to delete this. I'm going to delete this because I don't understand it. I don't know what it's for anymore anyways, and I want to do a new analysis, right? So let's quickly understand the chart we're in right now. This is the immediate supply. Thank you for that. Right, so I do believe this is the immediate supply indeed. All right, so look at this chart now. NZD Swiss franc. Again, Swiss franc with the long spikes, very annoying. And this is a 3-month chart. That's why it doesn't make sense, right? So back on the monthly time frame. And I would actually draw. So okay, so that was just the 3 months chart, making the zone a little bit bigger. All right, so there's that there. All right, structure. All right, markets need to break structure first for them to come down. Then somewhere in here is our weekly demand 1 and our daily demand 1, which we'll come to right now. I am clearly in the immediate supply, specifically like that. Right, and you can see markets definitely left the immediate supply and then dropped in here. 365 exhausted, markets pushed up. Okay, if we wanted to get better not that happy with that, but it would look something like that, right? So it's somewhat of a push up, right? Yeah, yes, no, yeah, right. So okay, cool, yeah, that's perfectly fine, right? So markets could leave in a supply, got to, valid competition, so a bigger area of competition for the demand, and then markets are now pushing back up. And the question is what to do. Well, my price is in between. Momentum has started and we're going to the upside. That's quite clear, right? This is actually a strong sign. Look at this, filling the wick to the upside. Hey, bullish engulfing, whatever. Another one, right? This is a retail trader's trend line that I'm drawing now. Trend line number 2 is not a valid trend line, but it just helps to see what price is doing. Okay, it just helps to see what price is doing. Most of it was downward momentum, then markets broke out of it, right? But remember, for a valid trend line, you actually want to see structure, higher highs, lower lows, blah, 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 blah. Okay, and then markets landed on top of our area of competition, which acts like a support. If you notice how price fed into it, resistance, and a support there, but that's not what we're trading. But I'm just saying it looks very much like it as well. Some confluence there with some retail trader stuff. Right, so I would put this as what we were talking about here. Looks like if I ever wanted to buy this asset, it will definitely be inside the gray square. All right, weekly demand, and I'm sure we'll find a daily demand in there or just above. In terms of supplies, markets, well, there's this distance, first of all, to deal with from here to there. A rough estimate. I'm just going to clone it. I'm going to delete the first one because the notes are in the way. Right. All right, so that'll take us back into these highs here. Okay, equal distance will take us back into these highs. And then after that, price would go back up or all the way down. But honestly, guys, I don't have a clean entry and I don't want to sell this asset if it's going to go, if it's building off these lower demands and just going, creating higher highs. I don't really want to be engaged in a swing sell, right? One could try their luck here, but I don't want to be engaged in that. Okay, one could try their luck there, but I don't want to be engaged in that. What would be nice, however, is maybe to catch some buys since we are trading in the direction of a buy. Markets are leaving, their markets are going up right now. So that would be something nice to zero into. Friday was the day to get in. Friday, Thursday, Wednesday, all these days that we just finished. Look at that, a bearish engulfing pattern literally used as a trap, right? Bull trap, call it a bull trap. So this is it. So if you don't trust this, and what I'd appreciate from this chart is the fact that it's left us some unfilled orders at the bottom. I would love to buy here with all my heart. I just want to see what's going on at the back. Right, so previously in the past, this has been used as a good place to buy. You can tell for, markets are avoiding that whole notion of breaking structure. They don't want to go down. That's why I like looking for BOS. When you find BOS, you find an order block. So previously, when markets found here, they created a new demand, bullish engulfing, price came back into it, exhausted those buy orders, price went up, and then they quickly created another one, a turning point in there, right? And so markets fundamentally have been going up, right? So we missed a retracement. This is literally a retracement in an uptrend, which again confirms that we're in an uptrend, right? We fundamentally missed the retracement where markets came into the 50% level. And now they're going back up. And like I said earlier on, a good target would be just there, but we shall see. If markets do come down, there's nothing on the golden ratio. So I'm going to go to H4, which is the final time frame, right? It's just too much noise now. Way too much noise. I can't even think straight here. So there's this area here, which will create another retracement somewhere here if markets were to come back up. So I'm just going to put horizontal lanes there and then delete everything else on the chart because there's just too many lines now and I don't want you to be too confused, right? So I'm going to delete this. I'm going to go to the daily time frame. That's our 0.618 area. But it's just hanging. No order block, no 50% body candle. It's just hanging, right? So I don't know. I don't know. This is break of structure. If it's a violent or a very big uptrend, you're gonna have to take some risks now, right? So you're gonna say this is a C-class trade, and what you're gonna do here is you're gonna risk little, not a lot, little. What would be nice though to take this buy here? See this here? is to wait for price to break this. So to go above this structure, because why? Price stopped there for a reason, right? So sellers took over. So you want markets to go above sellers right there, like that. Right, so price to break structure, and then when they break structure, you come back to the order block that caused it and you try your luck there. It's a high risk trade though, because there are better, lower demands in the process. I have a small, low risk pin in order here. I'm gonna have to catch some losses somewhere, but I'm not gonna avoid trades, low risk trade. So I'll have some type of a low risk. I'm just making notes for myself to remember in case I look at charts at 4 a.m. and I'm still sleepy. There's a low risk buy area and then buy here as well. Hoping that the exhaustion is not complete, because here this area is purely exhausted, if not broken, so to speak, right? So what I'm hoping for is this is the bandage that they've created a new demand here to hold, given the imbalance, right? You cannot deny just how seductive this buy area is, right? And this looks like a PCP that was dealt with, right? So markets defended this area a while back. It'll be nice for price to come in. Price comes back, you can imagine down here, if you extend this all the way down, markets will be sitting on top of a trend line inside a demand, blah, blah, blah. So I'd go 1%, 5%, 1% of my capital, 5% of my capital here. Low risk, no, I'm trying to say risk low or risk little. I'm not trying to say this area has low risk. I'm saying the opposite. I'm saying it's a high risk area, risk little. Right, that's what I'm trying to say. Come on, wake up, Leroy. Right, so something like that. Break up structure first, then if markets don't break structure and come back down, that risk is even higher. If they fail to close above before coming down, the risk is higher that they will smoke this area. All right, and your stop loss, this one is too tight, right? Your stop loss is all the way there. Something like that. And then the buy has to be then worth your time, right? I see. I was targeting here, so I would really go 2 trades in here. But again, it has to be worth it to you. It has to be worth wherever it's going. So probably somewhere up here will be a good take profit. So trade number 16 and 16, including all the other war rooms that we've done together this past week. NZD Swiss franc. For today, this is trade idea number 4 that we can take. Right. I'm aware of the time, guys. We're going to have to stop at this. Oh, USDCAD, we've already done. Thank you, Sia. Pound AUD. So I'll suggest we stop here. Make this the last chart only because of time. I know you guys. I mean, I've got 1, 2, 3, 4, 5. It's up to you guys. But 5 charts left. We can do this one. Then I upload the other 5 in the middle of the night or tomorrow something, or I power through. Completely up to you guys. What's going on here? I want to see the notes and the analysis. Right, so yeah, we're selling 30-minute supply, and this supply has been holding its ground, right? This is good. Oh yeah, okay, pound AUD. This was a good trade. I did take profit though. I did take profit. I have my regrets. Now, but clearly, let's see if we can re-enter. Okay, let's delete this, delete that, delete this. Right, so let's see. So we've got monthly supply on monthly supply, another monthly supply, right? But prices in general govern a direction in an uptrend, right? In general, since 2013, right, prices have been moving up, right? But long-term sell profile asset, now price is trying to change all of that, right? Since 2001, the first 10 years, sell profile, the next 10 years till 2023, potential buy profile to equalize this. Don't think price will get there, maybe another 2 years from 2023, but we shall see. Right, so then markets start to create a second uptrend, right? So there's a long-term uptrend and then an uptrend within the uptrend, so to speak. Right, now I need to ask a simple question: who's in charge? This is a governor leaving, has not yet arrived at a governing supply. Whichever way you view it, you could view it like that. Price hasn't arrived. If you view it like that, that's not our style. But in general, markets have not yet arrived at a supply. So I'm inclined to assume the last 3 months have been retracement. If they have, then I should get something like this. So I've got my golden ratio covering my fib level, right? So I like to wait more for the golden ratio. Generally speaking, I like to wait more for the golden ratio, right? But this is on like my entry time frames, like daily H4, H1. It's not necessarily how I would view the governing chart, but let's just see what's going on here, right? So price is clearly still selling, and we spoke about these sells last time, right? Aggressively, right? So markets arrived at a weekly supply. That's why markets turned, and that's why I sold pound AUD, you know, a while back, though, like a while back, sometime in September. It's not too long ago, but yeah, if we could do something like this, you would then see why. Right, so markets arrived at the supply, markets started to sell. Markets are technically in something that would, I guess, you know, simulate a demand on the weekly time frame. Let's finish. All right, cool, fantastic. Just do the 5 charts, and I don't have to do a war room tomorrow. Appreciate that. Right, so let me pick up the pace then. Right, so markets then are breaking structure, like, you know, we did this chart, guys. I remember I was doing this chart in one of the war rooms. That's why I sold, but then I got out at a demand. But look at this, another structure was broken. Price is going down on the daily time frame. It would have been nice to get another entry somewhere here, and maybe we will. Right, so we never look at chart style and go, it'll never happen. It will happen. I am going to wait up here. Although right now we really should be looking for buys. So I'm just marking this area to know where the true supplies are. But fundamentally, we should be looking for buying a little bit lower, not at the moment. So if price decides to come up this week into this area here, I'll be down for it, right? If markets decide to come this week into this area here, I'll be down for it. So I'm definitely going to want to sell pound AUD here. If you followed my previous war room, I looked at the AUD and AXY. And I think we agreed that the Aussie is very strong right now, right? Aussie is very, very strong right now. Aussie is leaving a demand. You see that there? So when you're looking at AUD pairs, don't forget to check the indexes of all your currencies, right? You'll learn a lot from doing that kind of stuff, right? But on the daily time frame, this is what I liked. I'm looking at something like this, and I see we're green. On Friday, we closed green just after we broke structure. And then we're consolidating till the area, and then we created another supply here. So I might be careful. I might miss this, right? This actually might have already happened, so to speak. So I'm gonna have to double check this on the smaller time frame. I'm gonna draw another line there, H4. Nah, we're good. Right. So this is one of those tricky charts. This supply has been broken, by the way. We could go deep now. So I've shown you what it looks like on the daily, on the H4 time frame. So let me explain. On the daily chart is my main entry, right? So on the daily chart, this is what I'm looking at, and I like this. So I'm going to have a normal lot size, not too high, not too small here to hold that area, right? Probably like a 3%, something like that, all right? And then I'm going to have a very small lot size, the smallest lot size I can go with on the account somewhere there. And that small lot size is going to have to hold the distance between the entry point and the stop loss. So if I can keep my lot sizes small, I can hold bigger areas of value. I'm a swing trader, so I'm going to have to wait for it to pay out, proper risk reward ratio. Trade 1, trade 2. If trade 1 gets triggered and trade 2 gets triggered, remember, when both trade 1 and trade 2 get triggered, I'll be holding negatives. Because remember, if trade 1 gets triggered and price goes to trade 2, that's a negative. And then if this happens again, that's a negative. Price is now on its way. But while I do that, if my conviction of the sell has not yet changed, I'm then going to dial down to my H4 chart. Let me delete all these lines so you don't get confused. And then I'm going to have a final sell position here. This one is going to have a big lot size, fundamentally because it's literally within the highest portion of the supply, right? So I want to hold that, or I'll have a medium-term lot size, and actually I have a stop loss there. Damn, so many levels. Double check the daily. Problem is, when you see charts with long wicks, you get a big problem, right? So it wants to cover this. that's going to be a problem. Sorry, guys, can I just gather my thoughts real quick? Right, so I have no intention of selling there. I want to sell here. Right, so I'm going to say this again. Daily trade with normal lot sizing for me, so 5% risk is going to be here. That's number one. And if you've got a small account, that's all you do. Don't even worry about what I'm about to say after that. Right, after that, I'm going to have trade 2 inside here. So basically, this is trade 2. Stop loss still outside the daily for trade 2. And that's it. I'm going to leave it at that. I'm not even going to do the third one that I spoke about. Just going to take those 2 pound AUD sales, or at least go try and mark up them and watch them as we go. It's very important if you have access to the remote course. If you're a registered student doing the live classes, I will promise to email you an updated version all the time because I'll dump them here. But I think what I'm going to do is I'm just going to give everyone access to this folder. So if you're in the live classes, you won't see the whole remote course yet, but you will have access to this folder. So just check it because I will write dates. So there'll be like trading plan for Monday, and then I'm going to go and upload the PDF. And then if there are changes in there, I'll let you guys know via email every time. And on the Telegram private group, and then those in remote course, I'll have to make time to add you guys to that private Telegram group this week. I know a couple of people joined us this past week, and I haven't had the chance to make contact with them, but I will. Right, so we've got some potential sells here in AUD pound. And how far are we going, sir? How far are we going? Yeah, it's very tricky. Markets are currently, the reason why the sell is going to most likely work is because markets will come back. Markets are leaving a demand, but the problem is they better not leave the demand with a lot of power, man. Come here, touch and go, and then we drop. I would most likely want to get out here. That's where I would probably want to get out somewhere down here, right? Unless if markets, before they come to me, remove these demands, then that changes everything. But for now, that'll be my entry. Right, next chart, NZDJPY. Someone said, let's finish. No one rebutted or corrected or said nope. So I'm just going to keep powering through. It is a recorded session on live, so you can always come back to it if you need to go. I appreciate you. NZDJPY. Now, you remember when I covered USDJPY, just think the same. All right, just think the same. It's a sensitive asset, etc., etc. Right. So there goes NZD. And a lot of these charts, is it me or has it just been showing a lot of strength? Can I just see what's going on in the NZD index? What's going on? Why? Give me NZD. What the hell is that? What's the, isn't it the QE dollar? Isn't it NXY? What's the index for NZD? Surely it's NXY, New Zealand dollar. Currency index. No. I'm not going to waste time on this, but that's disappointing that I can't find it. NZD index. No, it's not the right one. This is not it. This is not the index. All right, cool. I'll find it later, but I'm pretty sure it's NXY. And I know TradeView does this sometimes. This is something weird, surely. Yeah, this is something weird. I don't know what that is. But yeah, NZD has been showing a lot of strength lately in a lot of the pairs we've looked at right now. NZDJPY, let's have a look. So we've got this situation here on the governing time frame. Price is definitely responding like any other rate-sensitive asset going up. Like any other rate-sensitive asset, we should be worried about a couple of things. If markets remove a bearish structure to go up, don't fight them. They probably want to go up. But we should also note that when markets eventually get tired of going up, they're going to come crashing down as quickly as possible. So we also want to be aware of that. So if I do something like this, and then I do something like that, and then I do something like this, I get to project how far up we can go. Ugh, hides everything. Right. So anyways, we're going back up here. Long term, right? This is not even like, oh, in the next few days, we're going back up. This is long term, potentially trying to make a major turning point again, a new all-time high on this chart right now. Right. But anyways, that's my governor right now. The only thing I can work with my governor is the fact that he has created a new demand. This is immediate area of value and has essentially, okay, still a supply to go through. That's stuck on the other side of the trend line, so that's going to be interesting. So I want to find some buys for me here. Nice. Okay. Inside the daily time frame, this is your last line of defense. Right? Remember, this is all inside that governing demand. Now, markets hit it, and then markets hit it again, and markets left. And one would argue that instead of being too afraid of glass effect, they've created a bandage there. That bandage might be a good place to buy. All right. That bandage, NZDJPY, might be a very good place. Man, Alvin, I think I did a war room or a class or something. I know you're still watching. Thank you for this, Leroy. Will you be sharing the notes? I have no idea how to pronounce your name. That is Katungwa. Katungwa. I think I did a good job. Yes, I will. But because it's just, I was so worried about how the last challenges left. It's more responsible for me to share it with people, understand trading. You know what I hate about signals, Mr. Katunga, is the fact that I don't want to give 10 signals and then come back and show my results and I've won and then people have lost and then people don't understand why they lost, whether it was poor trading psychology, poor risk management, poor this, poor that. So what I'm doing is I'm trying to be as responsible as possible. There's risk management tapes on YouTube that I really wish everyone could watch before they take part in this stuff, right? And then what I've done is now, just like everything else, I've put them up in here. So in here, if you have access to this, it means you have access to everything. You've got my entire brain cells in your computer drive, right? This is my remote course. You can see how many people, this is our education group, right? So if you have access to the remote course, right, you will have full access to this. So I'll leave the link down below. And it's, I mean, I shouldn't be announcing this right now, but who cares, right? It's the 17th of October. I generally, right now, the remote course is half price. It has never been full price. And it's going to stay half price forever. If you look at the growth of the YouTube channel, it's going to stay half price until we get to 3,000 subscribers, which is a long time on half price. But very soon, I don't know when they'll announce it, but I'm sure by the 27th, 28th, we'll announce Black Friday. Remember Black Friday, November? So on Black Friday, it'll go down again. So literally, you'll probably get it for about $120 US to get access to everything. It's not just this folder you're going to get access to. It's the remote course, the entire course, Module 1, Mastering the Basics. So because I need people to understand what it is that I'm talking about, right? So blah, 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 blah. Everything is in here. So these are not empty folders. I open them just to show you that I know people are used to being scammed. So yeah, so yeah, there we go. ZXY, I tried ZXY, bro. It didn't work. I tried ZXY so many times. Oh, you know, YouTube's got a lag. So you're probably gonna see this ZX. Oh, I was doing NXY, not ZXY. Thank you. You're right. New Zealand dollar. Right, fantastic. Am I looking at? All right, let's go. Let's go. Thank you so much. Right. So the index, yes. I've analyzed this before. Right. Fantastic. So this is a strong Mr. or Miss Katungwa Mateka. I hope I've answered your question there about the remote course. The notes will be shared there. It's just that then I know for a fact that no one will use the stuff in a drunk manner that will result in loss. I don't want loss. I'm not a signal service provider. I don't just tell you to buy sell without a good reason. I like talking to people who understand what we're doing, right? So fundamentally, that's why I've decided to put them up there. Right, so this is a strong demand, right? And I've written strong here. Thank you so much for that, Alvin, like ZXY. And then there's something else I wanted to tell Alvin, but now I've forgotten. Train thought gone. Sorry, man. I wanted to tell you something, but it's gone now. Right, so price hit this demand, strong demand price, came back in March 2020. Again, sensitive assets all do the same thing. Markets have broken out, got our trade line touches. There's the next target. That's the next big target right there. Right, and like I said, going back. So all NZD pairs, be careful of this. They are slightly slumping right now, but overall, these babies are in a dominant uptrend, right? They are literally in a dominant uptrend, and the slump's going to continue for a little bit longer. And then I expect some massive pushes up from this weekly demand there, right? So that's just nice to know and understand. This week, NZD, right? So this is I remember we looked at the COT reports, right? NZD, we looked at that pump. So you can see it on the index now, currency index. There we go, the week of the 12th, pump, right? So if they reduce their sell positions, they can pump us out of this. If they just reduce them by like 1,000 orders and increase the buys by 2,000 orders, we go up, right? So NZD is hella strong. And then if the opposite happens, and they start to cool off their buys and increase their sells, we come down here, and the following week you'll find out they've decided to and the game just continues. The game just continues. Oh yes, Alvin, I wanted to tell you, I did see what you did in the private Telegram group a while ago on platinum. Remember, you guys, those of you in the private Telegram group, I said, look, man, give me calls on platinum. I want to invest in it, blah, 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 blah. That analysis, buddy, did you go back to your own chart? Did you see your own work? Because it's important. It's absolutely important. Alvin, I'm holding you to account. Did you go back and see your own work? What's the platinum chart, man? This why am I like catching blanks today? So let's say platinum is XPT. I would like a Nawanda chart or something that I like to use. Right, so I've got Saxo, there's Nawanda. Right, so do I have it marked up on Nawanda? Yes, I do. Alvin, you literally had the same idea as me. Remember, I said I needed this. You look at your platinum chart, dude. This is basically, I mean, I don't know if you didn't use trend lines or whatever, but this is basically what you argued on that private Telegram group, that platinum is going to go up. Guys, this is a high yield thing. It was precious metal that was smashed because of COVID. Most experts needed back at 1,700. So platinum EFTs, if you have access to those, if you know how to buy these things, if you're part of the Wealth in 3 Years program, the next platinum EFTs, I'm going to put them in the November newsletter. If you're in the Wealth in 3 Years program, we're going to be looking at gold, silver, all those things. Because remember, first October's list is must-haves. Those are high growth accounts. Those are defensive assets. Your crypto assets, all those things are very defensive. The stocks that I told you to buy, those are defensive. Those protect your portfolio during tough times. The next thing you want is these minerals, right? So I'm gonna build on that soon. But yeah, it's never too late, right? So right now, platinum is hedging towards a supply. We wait for that. If you want to wait for that, sure. But if you want to buy, there's a good buy order here. There's a good place to buy there. But Alvin, once again, you're currently completing the live classes. I know you had access to the remote course first, but that was good analysis. Yeah, okay, says thanks for the confidence boost. Yeah. Okay, cool. Yeah, cool, man. Fantastic stuff, dude. Fantastic stuff. Beautiful. This is an easy trade on Arbitrate, but it wasn't like I didn't move that quickly on it because I don't know why I felt conflicted that day. But I'm glad you took it up, man. This is fantastic stuff. And you get to see it. Once you start to learn this stuff, you get to see it for yourself. You're like, God damn it. And it's just your emotions. You take the trade, you put your stop loss, you manage yourself. You have a plan, you're an entry and you exit, period. And then you make money and you hold. And you break out of this idea that retail traders or human beings can't hold trades for more than 24 hours. That to make money in the markets, you must have a big lot size and hold for 2 hours. You break out of that silly crap and you just follow money. Right? You swing. A couple of 1 month into, I built you guys the process, right? And that stuff is publicly available. Part 1 and part 2 is up on YouTube on risk management. I showed you guys how to grow in a small account. Month 1 will feel like a tiring process. Month 2 will start to show you the gains because all you're looking at is how much did I start off with? How much do I have now? By month 3, you've got an account to play with. Right, and it's like, oh my God, 3 months zero. Yeah. If you start off with a small account like $100, then yes, you're gonna have to wait a little bit to grow it. But the growth is compound based on cluster-based trading, that means trading in 10s and 15s, assessing your weaknesses and adjusting your risk-to-reward ratio. If you're a 50% loser, 50% winner, you need to make sure you're taking 1:3 type of trades. If you don't know that stuff, you're literally begging the markets to make you broke. But we don't have time for these lectures. We don't have time. But there are classes on our YouTube channel that are worth your time. Honestly to God, with your time, right? So we're looking at NZDJPY. We can see with the index that is strong, right? Strong. We can see with the index is strong. So I was saying, I think I'd already worked all of this out for you, and I was saying come buy somewhere here, right? So I'll wait here. NZDJPY for me will be a good buy if it comes back down there. I don't do momentum buying. I just don't. I remember what it was like to blow accounts at least 3 times a week. I was that guy. I remember owing a lot of people money over my trading dream. I was that guy. So those life experiences have humbled me. I like rules now. I remember my beautiful partner who's just supported me emotionally throughout my years of trading journey. I've been okay. Not just okay, but she never went crazy when I pre-signed our homelessness contract because of trading. So I like my rules. So I'm gonna wait for price to come back down here. There's a big reason. Draw the area of value nicely, catch the area of competition. Don't get smoked. Don't get left behind. Sorry. There's a big reason why I like to wait. So NZDJPY, trade number 18 on the plan, clear buy. NZDJPY, clear buy. Right, guys, we're almost there. Promised that USDJPY, covered this in our classes this past Wednesday or Thursday or something. There we go. So we spoke about a lot of things, right? Monetary policy divergence. Monetary policy divergence is a simple concept. Dollar is going to be strong while Japanese yen has to go weak because interest rate hike, FOMC, tapering, all those things are coming up. So dollar is gonna rally up, right? So we can see that, and JPY is going to do the opposite, printing money, dropping interest rates, etc., etc. Right. So I wonder if Colin is around, because Colin asked me, in class the other night, look, man, CPI is coming out tomorrow and the dollar is approaching a supply. What do I do? Well, nothing, my brother, because we don't trade news. See, so markets did react to the supply, but pushed up, right? So markets are really following logic. It's really going to take a lot to get this. You guys remember, I told you guys to buy USDJPY in the public telegram somewhere here, and those of you who are not accustomed to swing trading, I told you when to get out. But if we're all, this is the thing about what I'm trying to do on YouTube, is that before I dump so much content, I'm trying to build a community, like a base. I just need 1,000 traders who actually understand what I'm saying all the time. Because if we are, this is it. This is what the senior, this is all we do in the senior traders program. Gang, we hold, and then 3 times a week we hold each other accountable. Where are we? We're here. Do we get out? Hell no. We have a plan. We go up. With the public telegram group or people at different levels of trade, it's difficult because your psychology dominates your trading. Right? The perfect buy, I announced it a long time ago in the public telegram group. This is priced since then. Price has just done nothing but go up. On the days of the DXY to hit the dollar, USDJPY was the only buy trade I gave. Everything else USDCAD was selling. Literally, this is it. This is, if you move on. Anyways, there's nothing. I mean, I always feel like I'm trying to convince people, and then I hate it because I start sounding like a salesman, and that's not who I am. It's not my strongest suit in general. I suck at selling my own academy. Right, we've got the smallest growth rate and one of the most accurate market readings. That means it's not my thing. I should hire a marketing team, but then I don't want to over commercialize trading, because then, what's the point? People want to use whatever they want to use, they will use it. Right, so I did talk about waiting for price here. Right, so USDJPY, I did talk about, making sure you've got somewhat of a solid area of value, big enough. But then I was very clear to Mr. Collin, we need this to break. If they can break that supply, I'll tell you right now, despite the challenge. Now listen to me. If they break that supply, despite the challenge, this is one of those trades I'm holding up until 121. You see my chart is marked up, right? So because I don't mention this or teach you these things, This is my target. This will be the trade I hold into next year. I'll meet my target, close all the other trades, withdraw, we'll record the withdrawals if you need that proof. If you're one of those people who want lifestyle content, I don't do lifestyle content. I really have no time to impress anyone right now. But I want you to know that this is one of those trades for me that if I get a good enough low buy, right, two or three good entries on the daily time frame is what I need. Why 2 or 3? To protect myself. So I might take 2 or 3 entries here. Entry number 1 is to take profit, right? So if they break this supply, I'm going to look for the next daily supply. I'll put it up on the trading plan. So I just want you to understand how you grow an account, or how I grow accounts in general, right? So I'm looking. Remember, this is the area that we're in right now. Right, we're in this area. I'm looking for an area above the area that we're in right now, so I know when to get out. Right, so all of this green is where we are right now. This is annoying. This is annoying. This is annoying. So maybe buy one that I'll put in. I'll exit somewhere here at 1116. Why? Because that's a good risk reward ratio, and I need to pass the question: can I keep $1? Right, that's the test of every trader. Can you keep $1? So it's all said and done. Can you keep $1? Sorry. So this would be risk to reward, and then trade 2 and trade 3 I'll break even. You understand? When I hit take profit here, right, which is risk to reward of almost 1:4, trade 2 and trade 3 for me, and trust me, most senior traders who are still holding this on our big accounts with me here. This is our second entry. The buy low was in here. I always teach people in module 1, week 4, week 5 in the remote course here. Please go back. If you have access to this stuff, registered students, and you're watching this stuff, don't graduate from the basics. Guys, it's golden nuggets upon golden nuggets. Week 4 here. This MTA, multiple time frame analysis. Multiple time frame analysis part 2, multiple time frame analysis part 3, risk management, how to grow a small account, all this stuff. These 2, the new versions of them on YouTube. These are the old versions, but use these ones more because I really go into this stuff deeply. Come back to this stuff, because if you look carefully at the when I told you guys to buy USDJPY on the public Telegram group, there is confluence between my governing demand and my weekly demand. That's why X Master Spot, right? So see, me and senior traders, we're chilling here. We're holding this stuff. But if in the challenge, or if you're entering new, this will be our second entry for me on different accounts, on the accounts I told you about at the beginning of this forum. And if for you, if it's your first account, you need to have a target, a profit target, so that if you're not disciplined in your mind, because what's going to happen is you're going to see 100%. This is 1:3. For every dollar you're risking, you're making $3 back. So if price gets up here, right, and you see all those profits start to slowly come down somewhere here, somewhere there, your mind, your pituitary gland, I'm going to start teaching on trading psychology on the channel. I can't wait for those are the things we're waiting for. 3,000 subscribers for senior traders to come on the podcast. 3,000 subscribers for me to start module 5, which is trading psychology. Nobody teaches that stuff. I have a massive structured course. I'm going to give it away for free on YouTube. I'm going to start, because you need to understand your pituitary gland is the one part of your brain that hates pain. This is why you would rather hold your losses far much more longer than your wins. It hates pain. You cut your wins so short because deep down in your heart, you would much rather make that little money than lose money. Psychologically, that sounds better. No one is ever consistently profitable in the long term by cutting profits. Why would you let go of such a beautiful runner? Yes, you don't understand markets, maybe, right? I'm not talking to those people. I'm talking to people who've done my course now. If you've done my structured course on supply and demand, why would you cut a runner? It means you didn't enter properly. If you entered, you only get one perfect buy and one perfect sell per leg as a swing trader. Intraday traders, they're everywhere, in and out, in and out, in and out, in and out, in and out. That's fine. But as a swing trader, the stuff that I am more passionate in producing, swing trades, we always only get one true buy and one true sell. And that's the one with the most confluence. This is another buy here. It's most likely going to work. I'm going to take it with you. But in the event it doesn't work, my whole world isn't shaken, because in my main account, I am in the true buy. Okay? Teaching again, but this is important. Please master the stuff. If you have access to my stuff, if you're part of 365 students, I need most of you in the education group next year. come join the Senior Trader Program. It's for free. You enter by progress. This is your exam now. Grow your accounts. You see me do it live. You see me do it in the class. You see me do it now. Just cut the crap, grow the discipline, and grow the accounts. Right. So USDJPY done. Buying here, in case that wasn't clear. If this breaks, even better, because so I was explaining. Take profit one here. The other two trades, I'll just simply break even and let them run. That's how I'm gonna play this. I'm not saying you should do it. You should have a psychological level where you cut yourself out, right? So I take profits there. The other two trades, this is it. Why? Because I understand monetary policy divergence. I understand that this is where price wants to go. And it's where price wants to go for now before retracing long term and then going back up. So this is my target. You can see, guys, on the presidential chart, those of you who have taught and understand the presidential chart, why this will be a significant place. It's the only place with sufficient supply. Everything else here, and I've taught on it on Euro Pound. If you look at my videos on YouTube, we call this compression, right? There's no supplies in here, compressed. All these supplies are completely compressed, which means we know for a fact they'll break. Here's a tighter compression. So look at this. The tighter the compression, the stronger the breakout, right? But yeah, supply and demand. So USDJPY, move on. That's trade number 19 for the challenge. It's getting exciting now, right? Because finally I can start to see. So now I have to plan how much I'm going to risk per trade. Remember, my target, $16,312 US is not your target. But I'm going to sit down at 16,000 on my spreadsheet and say I've got 19 trades to get this. How much do I need to risk per thing? Then I'm going to look at my accounts. On the 24K account, this is how much I can risk. On the $100 account, this is how many trades I can take, etc. To be methodological, you need to do the same thing. If you're a 365 student, this is supposed to be your best friend. I think it's at the end of module 2. Here, Traders Edge week 7, module 2. This boy, please use the trading journal. You heard what I said. You will not know your statistics if you can't keep track of them. You won't know if you're a 50% loser. Guys, looking at your history on your MT4, MT5 is not enough. You literally need to know that last week I took 10 trades, traded in clusters. I won 3 trades, I lost 7. You know what to do the following week. You need to figure out why. This trading journal is literally designed for that. It tells me so much about myself on a week-to-week basis. It is fundamentally impossible for me to screw up willfully and blindly. All of these are formula protected. It will calculate your win rate for you. It will calculate your equity. It will calculate your drawdown. Please use it. It's preset. It's preset. I'm happy to do another tutorial on how to use it if you guys need that. But it's preset for that reason. All right. So I don't want to abuse time. Pound USD. But if you don't know your statistics, you suck. You will always suck because you don't know what to fix. It's not enough to say, I'm losing. What are you losing? Right? What are you losing? Right. So there's, pound USD. Let me just show it to you on a clean chart first. It's leaving a supply and it hit the same demand that we had on Euro USD, which became the same demand that Euro USD broke, which I've covered in many war rooms. So now we're finally seeing risky assets copying, following her. Euro USD primary market, pound USD moves. Why is USD primary market? It's the most lucrative market in the world. The most trades are executed on Euro USD in terms of currencies. It is fundamentally the go-to market, right? So if you lose a lot on Euro USD, you've got big problems because they're supposed to be movements, clean movements, right? So we're waiting to sell here. It's already marked for us, right? It's already marked for us. Pound USD, if I remember correctly, the last time I did a live war room, there was a sell here on the lower time frames. There was a sell. I know there was a sell somewhere here. And I told you guys, I'm not doing it. I told you guys, I'm not selling here. No, never. Yes, the bearish engulfing candle. Yes, there is. Well done for figuring out the basics. But have you done module 2? You have to master the basics. Look at this. You always, markets, look at this. Rude. Markets, they are rude. Markets will take your strategy and then spit it out. Rude. Why didn't this work? First of all, confluence of the daily is important. There's nothing here. right? Nothing. This was a joke. This was a stepping stone for the markets to use to propel up after smoking sellers. Who are the sellers? Who wants to sell here, guys? Let's quickly identify people. Who wants to sell over here? Any retail trader who's impatient. Well, it doesn't matter if there's supply or demand. It doesn't matter if they're 365. It really doesn't matter. Whoever sells here is fundamentally impatient. That's why. They've seen a supply, but they don't care about everything else, the mechanics. The mechanics say, right, first of all, the governing time frame, prices hit a demand. Whether you have to take your time to see these things. Like I'm flying now because I feel bad for some of you. For me, I spend 8 hours on Saturdays and 4 hours on Sundays outside of war rooms looking at charts. For me, so for me, I'm taking these trades for myself, so I'm not wasting time. But I feel bad for those of you who need to do other stuff and don't want to miss out on the live, and I appreciate you for that. But we can see that price hit a demand. That's number one. So there's no ways. Look at where this white line is. Look at the white line. Look at the white line. Let's go to the H4 time frame. Would you dare take a sell that close to a governing demand? I mean, there's confidence like the ANC in South Africa that's still in front of people every day. And then there's ultra confidence like ZANU-PF in Zimbabwe, which just destroyed people's life. But this confidence of a trader who wants to sell this close to a governing demand, that's wild, right? So we agreed together, those of you who listened, that we're not selling here. We should have bought. I don't know why I didn't give a buy signal. We really should have bought. Right now this is where I want to sell, and I've marked it up here. And then we're talking in the class, in the live classes about a couple of days ago, and I narrowed this area down perfectly to H4. So there's an H4 supply drawing, but the daily supply is actually this big, right? So this is actually quite a nice place to sell. The yellow background is obviously the governing supply. So, and look at price now. Well, what did I say? I said you never want to see markets coming at you strong. Bah, 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 into a supply. So let's look at this daily supply here. This would have been a problem. Why? Because the first time, because I know you're getting confused already. Look at this. The first time price touches or gets very close to my daily supply, I've got, it's just too bullish. It's just, yes, fundamentally module 2 rules are you want to look crazy, right? But that doesn't mean you want to look disastrously crazy. You want to look crazy in the sense you want to make sure that smart money brings a trap and brings in the retail traders who are dumb enough to buy into an area of value supply. But this is still institutions creating an imbalance. This is it, right? Hello? Remember, if we're looking for an imbalance here, the imbalance is going to start there. I'm not here to teach, so if you're confused, I'm so sorry. I'm so sorry. I'm wrapping up. But if this was the demand, we need an imbalance. You can't sell. You're going to get chowed. Got chowed here, got chowed there. You're probably going to get chowed there because you need that. So a higher supply. That's why I always tell people, sell high, buy low. Supply and demand, sell high, buy low. When you find the leg, right? This is the leg. This is the top of the leg. That's the bottom of the leg, right? Then you start to do a weight judgment. There's my Fibonacci, not inside. This area of value is for the 50%. Fibonacci starts above your supply, somewhere in here. Because if you don't carefully track all of this stuff, you are going to lose money either here or potentially even here. So I realized, you know, and we spoke about this, you know, a couple of days ago in our class, that this might be a good place to wait for price. Might be, we might not even care about that. I mean, I do like to catch a good retracement, but if it's just way too high risk for me, I would rather wait there. And that's already so close to my golden retracement. I might as well just try my luck here. So some people might want to jump in here. Again, I don't advise it because for me, the only area with confluence, daily H4 inside the governor for a sell is up here, not there. And also, final point of why I'm bringing all this stuff is look at how price will look when it gets to this H4 supply inside the daily. I mean, right now I know I'm on the daily chart, right? Sorry, I deleted that thing by mistake. Look at how price is going to look. Look at the accumulation process now. So markets have been trading sideways. There's the area consolidation, right? I'm starting to feel, and we're now inside our golden ratio, right? I must be very careful. I must be very careful. Price might actually leave without me. I must be very, very careful. Very, very careful. Right. I don't want to panic sell on Monday but I better remember to put a pin in order. So I will have one here and one inside, but the bigger one inside. I really actually like the blue one. In fact, I wouldn't even have one here. If it leaves me behind, it leaves me behind, right? I'd want to sell only there, all right? So why? And then I told them, get out here. If you're new to trading, new to 365, blah, 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 risk to reward, take this Talitha area, get out there. If you're long-term, pound won't be able to keep up this momentum. If you're long-term, pound will not be able to keep up this momentum. You already know we're in a downtrend, lower highs. This is just a retracement. We already know that we hit here because of a demand, right? So we know that when we come back, there are going to be problems. If you're patient with price, that's a better target for you, right? 1:6. This is weeks. This is like proper money, but it takes time. And if and then this is like that weird demand zone that we're facing right now, right? Now, if you give some averages, you realize not much is happening. That the only time to worry about is, for example, here, where we're going to get out, number one, only up until there. Then when that breaks, the next demand only starts here. So in between, there's like a vacuum gap, right? So if this 365 breaks and it's already been tested for the first time, markets will continue down, right? But you clear place way to sell for pound. And I'm not even going to rush the daily supply. This is wild, you guys. Thank you. I appreciate all of you. If you're still here and you're enjoying this stuff, please don't forget to like before you go to sleep. Right. The last two charts, NZDUSD and pound JPY. I have a love-hate relationship with pound JPY. Right. NZDUSD. NZDUSD. All right. Cool. Exactly like Euro USD, Pound USD, markets have to hit this demand or have hit this demand, one of the two, right? So that's going to definitely be considered as an area of competition. Then markets have to go back up. Then when they come back down, they're going to break it. Just like Euro USD, these things are literally there. Euro USD led the way for all risky assets. So all of them with demands here that broke the structure, test the demand, go back to the supply, break the supply, and then we know we're buying into this in the second or end of first financial quarter next year. This is going to be the buys you never want to let go of. If you want to change your life, 365, 2 buys, held for 1 year, changed my life while I was learning the system. Open buy trades. My mentor told me, don't close this stuff. Fund your account, don't close, hold for a year while you learn, back test everything, study the markets. For that year, after 3 years of losing 2 trades, bought me out of debt because I held 3 months, 1 year, 10-year plan. Banks thinking 3 months, take profit in 1 year. When price gets here, if I don't tell you this next year, at the end of the second financial quarter, when markets return to this March, you see this here, this is that March demand. When markets return back here, whenever they do, this is a buy you want. Why? Markets are spending a lot of time dealing blows on these higher supplies. You see the profitability, guys, is distance. We get paid in pips as traders. At the end of the day, that's all we do. We get paid in pips. The distance between here to here is 571 pips. Whether I'm going up or down, that's the distance. The distance between there to there is 1,250 pips. So if I buy here and I hold to here, it's better. But if the supply is weakened or broken by the time I come back, more. So you don't want to risk so much of your life blowing accounts in small places when there are these big lion share trades that the banks are going to take. You just have to plan them, right? Anyway, NZDUSD playing along. This looks like a bullish engulfing pattern form. So we're quite bullish right now. NZD is strong. We've checked the index ZXY, right? So what happened here? So maybe here there was a supply drawn. I don't know. Then it was removed. But before we get there, I don't want to rush. The weekly time frame, all right, within some people would call this a bullish flag, right? So we take that today, swing high, swing low, bullish flag, and you can see clean golden ratio, beautiful bullish flag, right? So this is the pole, downtrend is the flag. It's like a flag, bullish flag, and markets are going to break out. How high is price going to go now, Leroy? Well, draw the flag properly. There we go. Right, simple. Take from the highest point to the lowest point of the flag. Something like that. That's give or take 500 pips. Clone it, then find the breakout. Breakout hasn't happened. Fantastic. Some people are going to wait for the breakout. A good 365 trader should have found the lows somewhere here and started holding the buy somewhere in this green square here. I'm not in it, right? And then we know that price is going to go that high. It's a guarantee. It's an economic science. No one knows where price is going to go. Markets are random, not a 365. No, sir. No, ma'am. Right. So, okay, cool. So there was some type of a supply here. Look at this. Did not work. Right. Look at that. Strong, 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 strong. Won't work. Won't work. Price must quickly accumulate before making contact with supply. But anyway, NZD is strong. This was a clean entry. My goodness. I missed this. Look at this. Clean. Zero drawdown. You know what? If you have me on Facebook, tomorrow I'm going to show in my stories a couple of senior trader charts and trades. You'll see we are so obsessed with zero drawdown. Zero drawdown simply means we don't even want to see price. We want to make sure we're not in the negatives for a very long time, right? It's not even, we don't even want our stop loss to get hit. We literally want price to hit our entry point and move. That's kind of like that type of accuracy that these guys are getting to. And a lot of it is based on correct time frames, right? You'll need, long story short, right? So on the daily time frame, this was spectacular. Beginning of October, market starts. I mean, I did a lot of videos covering why I wanted to be bullish on NZD a long time ago, but I think markets were mising me somewhere here. Interest rate didn't go as planned. So I thought this, what we're seeing now and what we had here, I thought it was going to happen somewhere here, earlier on there, somewhere here in the year, where I was waiting for FOMC area for price to come back to this FOMC area on June the 16th. I don't know where it is. Why is it? Yeah, somewhere. So this big red candle here. This was June the 16th. So there was a very strong supply there, and the FOMC area was removed, right? Because I knew a strong NZD was coming due to interest rate, right? Then markets were dead stopped at the previous supply, right? So this was the banks sold first before FOMC announced interest rate hikes. Interesting, right? Banks know always. And then markets came to retest and then dropped like crazy. Markets have come back here. And this is why I mark all FOMC areas on the charts, because I know if it's bearish for that asset, price is going to fall. Whenever it comes back, it will fall. And it always comes back. And it fell. Perfect entry. This was a good sell, but I'm not in this buy. How unfortunate. Right. If we're to continue with the buy thesis, we can wait here. It's that's it, full stop. We're not gonna negotiate or fight with price. We're gonna be patient. We're gonna wait, and it's not even like the most seductive place to wait, but we're gonna wait nonetheless. Price is gonna take some. Right, yeah. So I would come here. I would only take this trade if there was another green candle first, and then if markets make contact with this yellow area, we'll just be aware that the control is changed, that suppliers are in charge. That means if markets are now coming from anywhere in the yellow area, that this buy here is now a high risk buy, right? Because once hands change, anything goes, okay? Anything goes. We want to hope that markets will create this consistency of higher highs. We hope for that. But this is NZD, which is supposed to be bullish right now, and the dollar, which is supposed to be bullish right now. We've got two bulls in the crawl. Someone's going to lose the fight. So that's why I'm saying be careful here, right? Risk low, low risk, okay? That's trade number 21. Maybe I should just do one big PDF, guys, and just put it there, or we'll see. We'll see how much time I have tomorrow. But end of day, the first set of notes will be uploaded on the remote course, and then maybe the second set will come through, because we now have almost an equal number of assets, and I haven't even gotten into indices. All right, so yeah, this has been worth the time. For those of you who stuck around, those of you who watched till the end, thoroughly appreciate you. And the last asset for the night is pound JPY. Goodness gracious, what a nasty chart. I don't know why. If ever you were to look at my trading statements or whatever, if there's a chart I'm going to lose to, it's always pound JPY. And it's not that, you know, I've had massive calls, beautiful sells here. You remember this, put it up on YouTube, spoke about selling up here. But then I wanted to sell again, somewhere here. I definitely wanted to sell again, and that didn't go well. And it's like, I don't know where I lost $507 to this at the beginning of the year, some time ago, somewhere when I was waiting for this to happen to give us a correct drop, somewhere here. This is April, yeah, somewhere here. I lost 507. Then this beautiful sell here, I made quite a bit. Doesn't matter what I made, but it was quite significant. I was happy. And then I got another stop loss hit here, but it was very minor. But still, it bothers me that this chart, I need to work on my emotions on this chart, right? Because maybe the few losses that are affecting my win rate that predominantly come from pound yen bother me. Because look, we're leaving a supply. Right, so what on earth, would trigger this to happen? We are literally fresh touch meters. It's not like I'm rushing the trades on this thing. It's just that it's bloody confused. Quickly, the last chart of the night. Let's look at the pound index. Ugly, right? Ugly. What the hell? So this is the British pound index, and according to the British pound index, right, we should be expecting a drop. It looks like pound USD, it looks like euro USD. It's arrived at this area here, yada, yada, yada. Yes, it's green right now, but we know there's a reaction to this issue. We should expect a drop. And if you look at JXY, the Japanese index by itself as a standalone, it's melting. It's melting. So maybe that's why. Maybe that's why pound JPY is so strong, right? Look at this, because remember, I'm trying to sell. Do you guys get the logic? I'm trying to sell pound JPY. Or anyways, the last time I lost it there, I was trying to sell pound JPY. Terrible handwriting, not using my better mouse, right? Pound JPY. And pound is strong while JPY is melting. This is the index, right? So naturally, if I'm trying to sell pounds here and pound is strong, JPY is whack, right? I'm gonna catch a beating. And I did catch a beating, right? So markets are going to remove this on the JPY index, which is amazing, because at least we now know what to do for the other trades. This is a governing time frame. It's not small key stuff, right? This is actually quite a big deal. What markets are doing here is a big deal. Yes, there's a reaction to it, but the order flows have been poorly, affected. So if price doesn't respect this, then our next target is all the way down here, which is quite exciting because there are a lot of liquid, very, very fluid and liquid, yen pairs, right? Anyways, pound JPY for the end of the night, 365, guys, shake my hand. Thank you for sticking around. Thank you for sacrificing your Sunday nights, really, to get this thing on the way and going, right? So markets have run through, gotten in a little bit deeper into a supply, right? So this is my execution chart. Let's come back here, right? So this is what's happened, right? Markets have done that. Now, I find this, statistically speaking, to be a trap. Once you see a demand being created just underneath a supply, you are asking for a lot of problems if you go against that, right? So it's one of those charts that personally I like not trading at all, just to see, because remember, this happened now in the month of October. Since then, I've been trying to sell, hold sells, empty sells, some broke even, made money in one, and then the last one really just annoyed me, just hit my stop loss after in profits, hadn't broken even, and markets came back. This is a trap. I don't respect, because what do you want me to do with this? It's a governing supply and a governing demand. If you've done my module 2, you know that we've got a governing demand now that's made itself present in a governing supply. You can't tell me that the supply is weak. It is a PCP, but this is the governing chart, right? The glass effect on the supply is not too crazy. What am I talking about? The orders, the sell orders in this area are still strong, right? And we need about half of the order block to be taken out before we can start to talk about a weak area of value, especially on a massive time frame like this. So I don't know, colleagues, comrades, compatriots, right? But remember, when someone shows you their true colors, you always do what? You always believe them, right? And so that's what I think is going on here. But I hear the rules, because I don't want to trade pound yen for this challenge, because psychologically I'm holding on to something. If I keep coming back, if I've lost to this chart 3 times in 1 year, it's unlike me. And so psychologically, I need to step back on pound yen. So I will not be in any of the pound yen trades with you for now until I figure out some stuff. All right, figure out some stuff. But if you want to be in it because you don't have a negative relationship with pound yen, this is what I want you to be aware of. Number one, if you're taking a buy because we now think it's buy time, you need the supply removed first. And when you get the supply removed, you need to know that you can't go beyond this area here. There's going to be another supply. Long story short. Right. Number two, if you narrow down the true weekly supply like I've done right now, you realize markets have not really entered a supply. They've entered a governing area of value where supply exceeds demand, but they haven't started really tossing and turning around with supplies, which is why I keep telling you that it's a rush to say the supply is now weak because of glass effect, right? Price has not yet even begun arriving at where the sell orders are stacked, right? Sell high, even within areas of value, markets will always choose the highest place to sell. So that's something to be aware of, okay? Something to be aware of. Number two, once again, I most likely won't be in this trade with you. If I am, to be like on a very tiny minimum lot size so that I don't add these losses to my journey of heartbreaks, right? So now we're starting to see this area on the weekly time frame shape up a bit. So I would do something like this. So I would have a very healthy buy here. Healthy buy. Like that. Might as well. There's no point in cutting corners. You know, as soon as you get a new order block going up, then you can break even. 4119. Quite a lot, right? I like using, you know, read $100 US just to help people understand the risk. So if you got $100, it's a big area of value. Let's narrow it down for you, right? So option 2 is to have your stop loss out here, but just let it breathe. Ne? Let your stop loss breathe. Don't put it like that. Let it breathe. Really cup this, because in case price comes in and wants to touch the second demand, this is another demand here. So in case price comes to sit on top of this demand, then you just want your stop loss underneath there. And this is just one of those trades, right, that maybe are just not for you and your account. Because the most I can recommend, you know, from a daily perspective is dropping this thing to 300 pips. That's the most I can help you with, which puts you at a risk in about $27 US of your $100 US, if you have $100 US, right? Which is not the best capital to start off with. You want room to breathe, and you also want to be taking note of the trades. You see, I'm calculating risk for you. You must know what 5% is. You can't go, well, I'm using 0.01, so that's 5%. No, it ain't. Calculate your area of value. It's a business. You know how much your stock is, so you know how much you can sell it for. Your stock is going to cost you $27 at 0.1 on $100 US. So you have to know. The other thing you can do, which is the last thing I'll do for you on this last chart, is narrow it down. So H4, what are you going to do? You know that the green is the daily. That's what you know. And so you don't want to really get lost. My humble opinion is you want to get lost in this cluster here. You really don't, because they don't have confluence the daily demand, right? So number 2, this is most likely what you want to target. And maybe this. So let's get some averaging going. Oh, and then now you know the first target, you know, they didn't really put a lot in there. They didn't put a lot in there. Didn't put a lot. And then now you stake it. So the risk you're taking now is you are going to cover, don't cover or just cover the whole entire thing. This is the risk you're taking. You're taking the fact that you don't want to blow $27 off $100 US account if that's what you have. That's number 1. But number 2, in the event you do take the trade, you want to take the best. So if markets leave without you and turn at the top, such is life, get another trade. But this is what you want to do with a small account. This then allows you to at least toggle, you know, a little bit in your favor. Why is this the better one than all of this? It's inside the daily area of value. It is it's kind of like got the most sentiment in terms of the fact that they actually dipped the price to buy again. To do that, they needed to have buy orders. Be very careful of this though. There's a broken, or not broken, but an overuse demand there. So this might be your saving grace, right? So one would do something like this. So let's calculate the whole area first. Let's go back. 168 pips. Right. So now this is the smallest like it can be. You need to decide for your own account. Whether you got $100, $200, $300. That's the smallest it can be. And if you're one of those people going, you can't make money on 0.01, then honestly, this is not the channel for you, because you can. You can if you know what you're doing. You need to understand that. You absolutely need to understand that. If let me do the maths for you real quick. This is pound yen. If you're buying here, you're going to take profit right there. So you're going to risk $15, right? $15, and this is 565 pips. You're going to risk $15, and if you're successful, you're going to make $52 on 0.01. Shut that part. You see, already done. Stop that. That part of your brain that went, oh, wow, how much am I going to make on 0.02? Kill that. That's you playing Russian roulette with your trading account. The difference with your Russian roulette game is all the bullets are loaded. There's not even one. You're literally blowing your account. Kill that. I just told you one trade 0.01 from here to here will give you $52. You already said you can't make a lot of money on 0.01. Could do that at the same time 10 times. 10 times on different charts, not on pound, on different areas of value. Try to bang out 10 trades in 1 week. Retail traders take 10 trades in 1 day. I know you guys love signals. You guys will take 15 trades, buy, sell, buy, sell, buy, sell in 1 day. I'm saying if you find 10 quality trades in 1 week, that will give you roughly $52. $52. If you are a supply and demand trader and you really follow my rules, I expect you to win 6 of those trades. 6 times $52 on 0.01, where you're risking $15 or less. I prefer 5 to 7, by the way, but we'll talk about it. Watch the part 1, part 2 risk management. This is a lot of money in 1 week where you're risking very little money. The problem is no one teaches you this stuff. So you just go with the hype. You go with the stupid Facebook groups. This is it, 0.1, the smallest lot size. If you buy and hold and your plan is salvageable, this to there. And by the way, every time price comes back here, this price gets weaker. So markets could even run longer. Right? Could. I don't know yet. But this is it. Simple maths. This is literally what retail traders walk away from because of their inability to swing trade, number one, inability to understand that market structure governs everything, and the fact that they use silly strategies. This is what they're working. By the way, so we're all clear, this is $312 on 0.01. If you became a pound here, if you just babysat this thing and understood risk reward ratio, if this works out, we'll come back to this 2 weeks from now. Don't forget this, $312 clean dollars here. In fact, I'm going to take the trade myself. I'm going to take the trade so I can prove a point. Pound JPY. I'll refine it for you, obviously on the notes. Guys, I appreciate all of you. Please, if you have not yet managed to like the video, please do like the video. Happy trading, traders. Tomorrow we're hard at work. I will be going through Swiss franc JPY, Palladium, China 50, US 30, USDJPY, AUD CAD, Euro AUD, CAD JPY, Euro Pound, Euro CAD, AUD JPY, and Euro Swiss franc. Because that's what the first FX financial notes will be on, those assets. And then after that, notes 2 will be on the stuff that we did tonight together, which is USDCAD, USD Swiss franc, Pound Swiss franc, NZD Swiss franc, Pound AUD, NZDJPY, USDJPY, Pound USD, NZDUSD, Pound JPY. So that's what we looked at today. Obviously, plus USD CAD with the questions, etc. That'll be notes 2. I'll try and get that out tomorrow. I don't know. But anyways, everybody, please have a good night. Thank you so much for sticking around. I appreciate all of you. Have a good trading week. I will be doing my first scenario analysis tomorrow on US 30. I'm hoping you can learn something from that. And then class is back on Tuesday. And then if you just joined the remote course in the last 6-7 days, please expect me to make contact with you this coming week, just to let you know how things work, introduce myself, etc., etc. And obviously, if you do the remote course, or if you do one-on-ones after you complete module 1, and then one-on-ones after you complete module 2, so that I make sure you're on the heartbeat. Right, guys? 365. Shake my hand one more time. Thank you so much. Have a good night, everybody. Have a good night. I'm going to end the live now. I'm assuming there are no questions. I am going to end the live now. I appreciate every single one of you. Please watch the risk management videos on the channel. They are extremely important. They are extremely important, right? They are extremely, extremely important. Right. Good night, guys. Fantastic. Shake my hand, Alvin. Have a good night, everybody. Have a good week. Yeah. Cheers, cheers, cheers. Goodbye.